Good morning, everybody. Welcome back to another episode of The Market Open. I am sorry I am late, but I am here. Thank you all for being here. It is Friday, August 21st. We have got through the week. It has been a pretty crazy week in terms of the different updates that we had. And given the past 24 hours, if you have been paying attention to the crypto markets, it has continued to get pretty crazy. Folks, Bitcoin hit 80,000, or it hit 79,324. It did not hit exactly 80,000, but it got very close to it. Seeing Bitcoin at 77, I mean, this has basically been a $18,000 candle over the past 4 days right here. And it's quite incredible to see this type of momentum, this type of excitement. Obviously, the crypto derivatives are going crazy. You've got Ethereum that's getting some love, BTC getting some love. ETH hitting 2450 at 1.2394. It's pretty exciting because there's a couple of updates that we'll talk about that happened over the past 24 hours in regards to the inevitability of certain legislation that I think is going to be very important for crypto, but also the broader argument around, hey, at some point, maybe the thing, we just have to acknowledge the thing bottom, the thing being crypto as an industry, and that not doing anything for the past year meant that it was time for it to participate. Obviously, you've got some catalysts here, but the technical consolidation, I think, is hard to ignore. And it's very nice to see the breakout from that consolidation. ServiceNow, that's up a little bit in the pre-market. You got Broadcom up a little bit. Micron's up a little bit. In general, it's a green pre-market. I mean, hopefully we can continue some of this green momentum. Keel is up 5%. You got a lot of insider buying on Keel. Meta's up a little bit. Nebius is up 2%. Robinhood up 5%. Hitting $100, obviously, because of the Bitcoin momentum. SpaceX up 1% after a pretty ugly day. Intel's up a little bit. You don't have any major updates on the Iran war or bond yields, and we will continue to talk about all of those different types of macro concerns that we've been talking about all week. But at the end of the day, it's not like anything has meaningfully changed. But the 10 years down a little bit from 4.7 to 4.694. Oil is actually up today, which is kind of crazy because I thought it would be trending a little bit down with the 10-year, but it's at 87 right now. In general, it's a Friday. You got options expiring today. I mean, you didn't have a crazy volatile week for equities. S&P 500 is basically flat for the week, down 0.5%, nothing too crazy. 762, getting a little bit of recovery right there in the pre-market, up 0.5%. So I think this Friday might be a relatively simple day where you don't see anything too crazy happen, but we will get through a bunch of these headlines that have happened over the past 24 hours and see what it means for a lot of these different other asset classes that we have. Yes, oil is continuing to go up. Again, it's up a little bit, but I thought it'd be kind of chilling in the 85 range. Ended up getting up to that 87 level right now. Good morning. Thank you, everybody, for being here. Yes, Percent, we'll be talking on Monday about the Iran situation. So we'll be listening to what he says. He announced yesterday that he was going to have a press conference on Monday. So Monday morning, we'll hear what he says. We have NVIDIA earnings next week. We have Jackson Hole next week. I mean, we got a bunch of stuff that's happening next week. And, a lot of that stuff is going to be very, very important. Moderna did end up taking a hit over the past couple of days. Now, again, this thing went up 180%. So at some point, it was going to chill out a little bit. Yesterday, it was down 23%. 134, still up a lot from that $60 level it was at before it announced the phase 3 results of the personalized cancer vaccine. But that one's up a little bit right there in the pre-market. I think Bitcoin really is kind of the story of the week. I mean, 61,000 to 77,000. It's one of those things where it's like, it's starting to make people think, all right, for this to go back to the low 60,000 range, which it was basically stuck at for the past 7 months, like what would it take? And if it's not going to easily happen, then maybe this becomes the new base, and maybe this is something we build off of as well, which would also be very, very exciting. All right, let's get into it. Good morning. Thank you all for being here. Happy Friday. It's been a long week. Dude, yesterday it was like flooding in New Jersey, New York. Is anyone in Jersey, New York? Did you guys see that? Like, I was in an Uber yesterday. We were literally stuck in 3 feet of water. It was only for a couple blocks, but I'm not even joking. It was 3 feet of water that the car was stuck in. And we haven't had that type of rain in Jersey and NYC for a while. So it was kind of crazy. But yeah, there's definitely a lot of rain yesterday. And then this morning I was outside. It's getting cold now. Like, I think that rain left, a little bit of cold weather. And it kind of feels like we're in that part of August where things are going to start to shift. It's not going to necessarily be as warm as it was for the past couple of months, which means we are getting into fall, which I'm excited for because I love fall. But it's also crazy how fast it is. It's actually happening. Yeah, it was a bad storm yesterday. The ads, bro. I don't know what to tell you guys about the ads. I don't get it. I think I'm going to have to legitimately contact YouTube here. Why are they giving it to all of you guys at the same time, too? You guys realize this never happens, right? For 4 years, this has never happened. I'm telling you, this is not on my end. I haven't changed anything. The only other 2 settings you could pick require you to manually insert 6-minute, 30-minute, 18-minute ads. The setting that I have is the one that leaves it in the beginning and in the end, and if people watch it after the stream. But for the past 4 years, no one has ever got an ad in the middle of the stream. Sam says everyone just needs to buy YouTube Premium. Look, I love YouTube Premium, but for the people that don't want to buy it, I get it. I don't know what to tell you guys. I mean, I can try contacting someone from YouTube, but I really am not sure how to fix that. Is weird. That is very weird. All right, we'll try to figure it out. I'll try to figure it out over the weekend. No, I don't think they're trolling, dude. I think when like 15 people say ads, that means they're getting ads in the stream. I'll try to fix it over the weekend, guys, but I really don't know. I tried looking into it last night. The problem is you cannot turn ads off on a stream in and of itself because then YouTube doesn't push your video. If you completely turn ads off, YouTube has no incentive in the algorithm to actually show the videos to the people because at the end of the day, YouTube needs to make money off this content. If the content's just sitting on their platform, not being monetized, they're not going to push the video. But you're allowed to turn ads off in the middle of a live stream. That has been the case for the past 1,000 live streams I've done for the past 4 years. So I don't know why they're showing it now in the middle. But we'll figure it out. I'll try to see what's happening over the weekend and hopefully see what we can do about this. All right, so let's get into it. I think we got to start off with kind of the biggest story that's happening right here, which is crypto. So you got a couple things that are going on right here. We'll just go through some of these core updates, and then we'll talk about some of the AI headlines that we had yesterday. First of all, Ethereum ETFs bought in $189 million of spot purchases of ETH, which is very, very exciting to see. This is the single largest buying day in 10 months for Ethereum. So once again, you are seeing some of that momentum come back into the broader institutional cycle when it comes to ETFs. Same thing for Bitcoin. Yesterday, Bitcoin brought in $600 million. And the day before that was $517 million. So you're talking about $1 billion of flows coming into the Bitcoin ETFs across the Fidelity ETF, BlackRock, Kathy's ETF, all the different ETFs that are out there. ARKB, BTCO, HODL, BTCW, VanEck ETF, Bitwise. You're talking about $1 billion in a couple of days. I mean, that's real money that's coming into these ETFs, which I think is getting the market a bit more excited as well, because maybe the institutional players are coming in and saying, hey, we think that this asset class is ready to take off. And then on top of that, I thought this was also really interesting yesterday. The Clarity Act is going to be voted on September 15th. That is the official day. For those that are wondering, when could we get this Clarity Act vote in the Senate? It is September 15th. The head of the CFTC said yesterday, even if Congress doesn't vote on this on September 15th in a productive way, in a way that actually gets 60 votes to get it across the finish line, the CFTC will take action themselves to make sure we have real legislation when it comes to crypto.
If Clarity continues to stall because of Democrat obstruction, the CFTC will utilize its existing authorities to begin establishing a regime for crypto asset markets. We owe it to the American people to do so. President Trump's promised to deliver a crypto asset market structure, and we will help him deliver on that promise. We will heed President Trump's call to codify a future-proof digital asset market structure that cannot be undone by the crypto haters. To achieve this, I've directed the CFTC staff to begin exploring rules to codify a CFTC market structure for crypto assets using the agency's existing authorities. This could enable current registrants as well as non-registrant crypto exchanges to be designated by the CFTC as a type of DCM known as a crypto asset market and offer crypto asset trading on a leveraged or margin basis subject to purpose-fit rules under the CFTC's regulatory oversight. I've also directed staff to engage with developers of on-chain finance protocols to establish ways in which developers can offer their protocols in a legal and compliant manner in the United States, future-proofing developer protections once and for all. We're going to give Clarity its breathing room for a vote, but if the Democrats cannot support a bipartisan work product which reflects compromises from both sides of the aisle and ultimately send a fair version of the bill to the president's desk, then rest assured, I will direct CFTC staff to move swiftly to propose these rules for the industry.
I mean, the CFTC is not messing around, bro. They're basically giving the Senate an ultimatum saying either you guys vote to make sure we have common sense regulation and legislation around cryptocurrencies and digital assets, or we're taking this matter into our own hands. And quite frankly, I love it. I love it. Like, enough is enough. Trump ran on being the crypto guy. His administration was supposed to get crypto through the House and Senate. The Senate's being the holdup because of whatever stupid concerns they are worried about when it comes to the big banks. Like, the world is becoming decentralized when it comes to finance. As Vlad says, we are in a tokenization super cycle. We need common sense legislation to protect people in order to make this happen. And quite frankly, did we all forget? We need people to buy our treasuries because we spent 3 hours yesterday talking about bonds. And if people buy treasury bonds, yields come down, which helps the cost of capital for financing the country. Guess what incentivizes people to buy treasuries? Stablecoins. Like Besant said last year around November of 2025, that stablecoins could become a $4 trillion market. How do stablecoins become stable? They buy treasuries. Like, the amount of demand we would have for treasuries if we could actually have a real proliferation of stablecoins across the country, from the biggest financial institutions in the world that would have to back their stablecoins one-to-one with U.S. treasuries, would be amazing, right? And it would actually have some buying pressure on these U.S. treasuries to start helping those yields come down, because obviously this Iran war is not ending anytime soon, so that's not going to be really something that helps. So I think we need common sense legislation. I think the CFTC, which by the way was the commission that allowed Kalshi and all these prediction markets to finally become legal. Without the CFTC, you had Polymarket, which is doing it illegally offshore, because there's no common sense crypto legislation for them to be able to do it in a legal crypto manner. So the CFTC is what really started the ability for prediction markets to happen in the United States in any meaningful way. And obviously that industry has grown massively. I think they need to do the same for the Clarity Act if we don't actually get the Clarity Act passed. And I think this is kind of like a way of telling Congress, if you guys fail the American people and you don't get this past the finish line, which is something everyone, ultimately cares about in one way or another, you're going to be affected by this, and we need this common sense regulation, then the CFTC is just going to take action. I think this is great. I also think this is also why Bitcoin and Ethereum have run, because as soon as that video came out last night, I think the market was like, oh, this is happening no matter what. This is happening no matter what. So whether the Senate agrees or not, we are going to have some type of regulation here that allows for tokenized equities, that allows for perpetual futures contracts. Obviously, Trump mentioned Hyperliquid the other day, and that is what sent Hyperliquid going higher. Like, there's no reason all these other countries are able to enable this stuff, but America, like the country that's leading this AI revolution, is acting like we have no idea what to do with decentralized finance. And I know there's, larger interests that probably don't want to make it happen and all this stuff, but at the end of the day, Trump campaigned on this. You've got a lot of people in the administration that want to make it happen. It's going to be net good for everybody if there's more competition in the space. And it looks like there's going to be a chance to make it happen. So if it does happen, I think that's going to be very exciting. But the fact that there is a chance for it to happen regardless of Congress, I think is basically why Bitcoin has started to make a little bit of run. This is all on the backs of not expecting a rate cut. I mean, that's the most exciting thing about this Bitcoin run. There's a 34% chance we get a hike, not a cut, but a hike. So hopefully if we don't get a hike, we don't get a cut either, but there's still a chance that we could get a hike. I mean, crypto would not like that. Liquidity would dry up if we were to end up raising interest rates. Growth stocks would not like that either. So the fact that crypto is running on the face of just the nature around legislation and sentiment coming back without the possibility of a cut, because I really doubt we're going to get a cut this year, I think is exciting. And this thing would have to fall pretty aggressively to go back to levels that it was at a few months ago, or even a few days ago, which doesn't seem like it's going to happen. So what does that mean for investors? Well, BM&R, this thing, I mean, it's very simple, right? If ETH runs, this is going to run a lot harder. The thing about BM&R in the face of this bear market is they've been buying ETH, and they've been buying a lot of it. And, I think they're still down on their ETH. I don't know the exact percentage, but I would still imagine it's, because they bought so much of that 4,500 level, they're probably still down 30 to 45%. So obviously you need a pretty massive run. But the point is, when it does run, the proxy to that asset is going to be BM&R. Same thing with MicroStrategy, which is up like 30% this week, because they've also been buying Bitcoin. I know they've sold a little bit of Bitcoin, but they have been buying a lot. I think they're now sitting on an $895 billion or $895 million unrealized profit. They just basically got above their cost basis. And because of the amount of Bitcoin that they have, that equivocates to about $1 billion. And so I think those proxies are going to run. I think they're going to have some more excitement. It would be nice for a lot of these names to break even. Coinbase right there at 180. Robinhood, obviously, I think can make a real big run to 120, 130 if crypto continues to break out. But the fact that you're seeing this happen, you're seeing the potential of this happen in the face of potentially getting a rate hike, I think is very encouraging. And I think it's safe to say that with all the bad news we've had for Bitcoin to have this type of price action, maybe it has bottom. Equivocate is not a word. Equivocate is a word. If your name is Amit, you can just do things in life. You can just make up words. You can say them in front of people and use it in a sentence. Everyone has free will, okay? You know, Declaration of Independence, freedom. That's what we fought for. Gold up 1.5%. Gold is also loving what we've got. And then silver up 2% as well. So the macro assets that need excitement for crypto to do well are starting, I think, to get that excitement back. And obviously, you know, gold and silver are uncorrelated to crypto outside of the fact that they're starting to run with the broader risk on sentiment via the idea that, you know, yields rising, having some type of inflation hedge. If yields come down, that's more excitement for risk on assets. Like they're kind of in a good place where stocks aren't competing for the attention of all these different macro assets because stocks are already at an all-time high, right? So you've seen the stock market basically flat this week. I mean, Marvell was up a little bit, Robinhood was up a little bit, individual stocks that individual catalysts got the bid, but the macro assets were really the one that outperformed this week. And the reason for that is because stocks are at an all-time high. And so I think the market's looking at other things that haven't run this year, looking at the tangible catalysts that are behind them, and then saying, you know what, these are assets that probably deserve a bit more attention. And that's what we are going to do. Marvell right there, 253, as it continues to go green in the pre-market. So that is what we got from crypto. Anthropic, let's talk about that. They are getting ready to go public. Quite frankly, I think this is the time where they really need to focus on going public because you're getting another headline every day of token costs going down. And I think Anthropic understands that the best time for them to really be able to make sense of what's happening in the AI ecosystem where they are still the top dogs is right now. You can see, though, that Anthropic, I mean, they're starting to come around with stuff that Karp has been saying for a while. So yesterday, what happened with Anthropic and OpenAI? Well, Anthropic planned to change their data retention policy for advanced AI, and OpenAI is getting ready to give up their zero data retention policy. The reason this is so important is because what has Karp, you know, been saying for so many months now? These companies are stealing your IP and they're monetizing your data, being able to sell your compute, and effectively using your data to train their models to be able to build their competitors. Well, yesterday, Anthropic came out and said, we plan to change our data retention policy for advanced AI. Anthropic now is planning to allow business customers to keep greater control of their data when using its most capable artificial intelligence models, a stark change from an earlier data retention policy intended to migrate potential cyber attacks. Not just Anthropic, though. I mean, the fact that this both happened on the same day yesterday was kind of crazy. OpenAI offering zero data retention for frontier models, previewing private safety processing, which strengthens safeguards across interactions while remaining compatible with ZDR. I think both of these companies are realizing not only are the token costs going down dramatically, which is why their business models are under a little bit of threat, right? Because they have to continue reducing prices. OpenAI once again reduced prices this week, which kind of shows the lack of a moat that these companies have. If one guy's raising prices or lowering prices, the other guy has to as well. But I think a lot of these companies are coming to them. Sorry, mitigate, not migrate. Are coming to them and saying, we're not going to sign a long-term contract with you if you can't guarantee at every level that our data is going to be safe. And I mean, who's the person in the company that's been talking about this? It's Palantir, right? Which notice, you know, a lot of stocks have lost a lot of their momentum from the rebound they've had. Palantir is not. Palantir is up 40% from it's up more than 40, it's up like 70% from the lows, but it's up 40% from that 120, 125 range. And it's kind of just consolidated here, which I really like because it's, you know, building a new base at a different level. But I think the rest of the market is starting to realize Karp was right when he said these CEOs are having private conversations with other CEOs and being like, why would we give our data to this company that doesn't have a business model? It's just selling tokens. And we need the S1 to figure out how profitable is token selling, because right now no one really knows, and potentially uses our data to train a model that then competes with us. Like, it is absurd for us to do that. It is not really embracing the type of institutional sovereignty that Palantir has been talking about. And I think the fact that yesterday Anthropic and OpenAI had to come out and change how they think about data retention policies just goes to show that they're having more conversations with enterprises that are tired of this shit and they want something different. And that's a good thing for the broader industry, but it also means they got to get this IPO out pretty soon. Because at some point, you know, the IPO doesn't necessarily make sense if, you know, the hype and the momentum is not there. So, you know, and I'm sure they've tried to focus on ZDR and data retention in a more meaningful way. But yesterday, when this Bloomberg article came out, basically it made the case that you're having different safeguards and guardrails being put into the new latest version of Fable 5. You even had an Anthropic employee tweet about how they're doing this. He said, we're launching new Fable safeguards for enterprises that work on your infrastructure, so you have control over where your data lives and who has access to it. We've been developing it alongside 100 companies for a bit and hoping to roll it out more broadly in the fall. He tweeted this yesterday. I mean, this is absurd to me. It's like, wait a second, you've been developing new Fable safeguards for enterprises that work on infrastructure to have control over your data. How is this not baked in to the very essence of your product since the beginning? It's like, oh, because they didn't actually care about that stuff. They wanted to sell tokens. And I get it. That was their business. But like the fact that now it's becoming a priority is because they can't go public without actually focusing on all this stuff. There's no way they're going to survive earnings calls when they have to deal with analyst questions about, hey, like, are the companies actually happy with this product? Are they sustainably going to stay with you guys over the coming years for us to be able to buy your stock and hope that you can increase earnings? Or are we going to see companies just say enough is enough? Like, we're taking our model somewhere else. We're, creating our own models, hosting our own models because we just don't trust the compute provider or the model provider that we're working with. And so from that perspective, I think it's a net good thing for the industry, but it also means that like this IPO has got to happen soon. Now, the other thing about the IPO is that they're looking for about 100 billion, which would be 15 billion more than SpaceX raised. SpaceX raised 85 to 86 billion, which would make it the largest IPO ever. And I don't know, man. It just feels like a lot of hype over something that has not necessarily proven itself in the most meaningful way. I've thought about it a lot. I just feel like I'm going to sit out of the IPO. Like I might trade it, here and there, but like in terms of actually buying the stake and holding it long term, I feel like I want to see how the dust settles. I think it's going to pump. So I think there will be a lot of people that trade it because it's Anthropic, it's going to pump. It's just, I think there's a lot more unknowns than knowns about their rate of growth, their sustainability of growth, their operating margins, et cetera. And the fact that they're trying to raise $100 billion, I mean, again, that S1's got to come out, and maybe it changes my mind because the numbers are just that amazing. But for them to take $100 billion of liquidity out of the public markets would be pretty special for them to do. And I think they can do it. The question is just, how do they justify it? Navius, right, they're up 2%, SpaceX up 0.3% as well. And, if they can, then you're going to start to see a lot more excitement and momentum around this type of stock as well. I'm heavy in VCX, which owns Anthropic. That is true. If you got an early, VCX has had a decent run. Now, this thing got kind of crazy a few months ago. I think that's like 500. Yeah, it got to $575 in March. This was when the SaaS apocalypse was. They should have IPO'd during the SaaS apocalypse because everyone thought that Claude was killing everything. That was the time to IPO. They raised like a $380 billion round. And quite frankly, they probably used the SaaS apocalypse as hype for raising that $300 billion round. But this is when they should have went public. VCX is now $39. So obviously their stake is not, as valuable as it was before. But Zoom, there's a lot of different public companies that have some private stakes. Obviously, Google and Amazon have a stake in Anthropic. So if you own them, you technically own Anthropic as well. But the actual company looks like they will be going public in October. SanDisk right there, that's up 1% in the pre-market. SK Hynix up 2.5%. And then in Vita, that is also up as well. Amit, do you start before 8 every day? I start at 8:45 a.m. Eastern. So that's technically before 8 o'clock if you're in a different time zone. Like if you're in Cali, that's 5:45. If you're in Texas, that's 7:45. But it's 8:45. I should say 8:47. Dude, those 2 minutes, something happens during those 2 minutes and makes it hard to be here right on time. Okay, a couple macro stats. Take a look at this. So speaking of Anthropic and AI and the broader sentiment around AI, dude, I didn't even have to wait for the comments for you guys to say 8:47. I just knew Hollis, BSOF, you guys were going to say 8:47. 2027, we're going to make sure it's 8:43 every day. Do you support or oppose the following types of projects being built near where you live? This was kind of crazy. The American public would rather have a nuclear power plant in their neighborhood, 44% of Americans, based on this poll, versus a data center. Only 15% of Americans want a data center versus a nuclear power plant. That's kind of crazy, dude. We're seeing this in Pennsylvania with Josh Shapiro signing executive orders, in Texas with Greg Abbott. So you've got Republicans and Democrats with Ron DeSantis in Florida, with Kathy Hochul in New York City or in New York State. You're just starting to see some of that sentiment that's not really positive around data centers. And all of us as investors, we kind of need this data center train to keep going. But you also need the political appetite to be strong for data centers to, have the momentum that it's having. So I think this is another kind of headwind for Anthropic. It's like they've got to really do, and quite frankly for NVIDIA, because ultimately their GPUs are in the data centers. They need to do a good job really explaining why these data centers are so valuable and so important, because data centers give you this graphic that we're seeing right here. S&P 500 earnings momentum at the highest level since 2011. 64% of S&P 500 companies have exceeded consensus forecasts. 90% of those companies have beat on revenue and EPS. I mean, this is very, very strong earnings growth. And this is all due to CapEx, all due to data centers, all due to this industrial revolution that we're having in the case of AI. And, we saw what happened with Nebius over the past couple of days, just on the hesitation of their data center build out, kind of pausing in New Jersey. Like, you can't have this happen. Definitely the neoclouds and the broader semiconductor stack is not going to like it. So, I mean, as long as that doesn't happen, I think we're going to be in a good spot. But right now, that's something that obviously the market has to deal with. And then speaking of data centers and the data center build out, Broadcom ended up filing for $60 billion of financing to its latest AI deal, with the full package potentially reaching nearly $100 billion. The structure could include $60 to $70 billion of senior secured debt, plus roughly $30 billion of junior debt. Apollo and Blackstone, two of the same firms that are part of NVIDIA's $500 billion AI build out, are in talks to participate. Why is this so important? We talked a lot about the sort of conundrum and paradox that we're in around bonds and yields yesterday, which is that big tech needs to keep spending on AI CapEx in order to grow. In order for big tech to keep spending on AI CapEx, 10-year crossing 4.7 again, they need to lever up their balance sheet with debt, because that debt allows them to take that money, get a cheap financing cost, Google doing a 100-year bond at 6%, and spend that money on data centers and compute and GPUs. But if they're giving you 6% and the 10-year from the US Treasury, which is supposed to be the safest bond in the world because the US is never going to default on their debt, is only giving you 4.7%, if I'm a credit investor and I can get 200 basis points above what the Treasury is giving me by betting on Google, and I don't think Google is going to go out of business, I'm probably going to put my money into Google instead. So the competition with the long end of the curve from these hyperscalers, and now Broadcom's, I don't know the coupon on their bonds, but 100 billion, 80 billion of debt that they're putting into the system. If it's going to yield you 6-7%, I mean, that's better than what the 10-year or the 30-year can do. The 30-year is at the highest level since 2007, which is why Besant in that CNBC interview yesterday literally said that hyperscalers should continue short-term duration bonds versus long-term bonds, because it's competing with the long-term bonds of the United States. The irony is, if they don't do this, they don't get the money to spend on CapEx. If they don't spend money on CapEx, we don't grow. And as Besant said yesterday, the only way to deal with our debt issue is to grow, right? Like, the Republicans or Democrats are not going to cut spending. So I think we're in this broader conundrum. Now, the simplest way to navigate this, obviously, is to end the Iran war, because then oil comes down, inflation comes down, the 10-year yields come down because the market starts buying up bonds because inflation expectations go down. But that's not happening anytime soon. On Monday, we'll see what Besant says about this whole new economic pressure program that they're putting on Iran. But until that happens, I think the market is going to be a little choppy, because at some point, if yields get up to 4.8, 4.9, like, I just can't see how stocks thrive in that environment and just continue to push all-time highs, because something's got to break. And it doesn't have to break catastrophically, but there has to be something that is done to calm down these credit markets. I mean, the stock market can go up or down, and really, the administration might feel the pressure, but they're not going to care that much. But if the cost of capital continues to go up and we can't literally pay our bills as a country, that's a whole different dynamic than the stock market going up or down. And so I think time will tell, but, that adds pressure when Broadcom enters, into the market with 100 billion of debt. And it's something that is going to just create more pressure for Trump to be able to end this war, to have some type of external catalyst to get these yields to come down. Bitcoin right there, 76,991. I also think that's why Bitcoin's been running. I mean, I know this Clarity Act legislation stuff is important, but I think there's some level of, hey, like, yields keep going up, we need some way to protect ourselves from inflation. Maybe Bitcoin is the asset. Now, the counter to that is that Bitcoin is the risk-on asset that goes against inflation, not necessarily as a hedge to inflation. So, you might have that push and pull, but it could be part of the reason why Bitcoin continues to go higher. Yeah, it could be choppy until Jackson Hole. Warsh will be speaking the day after NVIDIA earnings. And so I don't think he's going to say anything interesting, though. Like, he's not going to reveal any, concept of cutting rates or not or hiking rates. Like, we have the September meeting 2 weeks after Jackson Hole. So I think it's going to be a very formal thing for him to just go up and talk about monetary policy. But I don't think he's actually going to give a 2022 type of speech where Jerome Powell was expect pain, right? Powell literally said, expect pain. And he signaled like, hey, we're going to have to hike rates. I don't think worse is going to do that, especially because the Fed future probabilities don't say that. So I think the worst thing is probably going to be a nothing burger. You'll get some stock reactions to it, but I don't think it'll be definitive in, saying where policy is going to go. Iran, is that up in the pre-market? Iran is up a little bit. That's up 1.8%. Again, the neoclouds got a hit this week, and Nebius and CoreWeave lost pretty much all their earnings move. Iran has earnings after NVIDIA, so they're just going to have pretty good earnings to, get the same reaction. But unfortunately, if Nebius and CoreWeave lost a decent chunk of that earnings move, CoreWeave lost all of it, Nebius lost like 70% of it, then Iran's just going to have to put up some big numbers because it's not just going to be running with the other earnings as well. So that is what we have there. Robinhood's up 4%, Coinbase is up 4.75%, and then you've got Celsius right there, 32.54. That one is flat, and it was slightly up yesterday. Obviously got up last week based on that Rockstar Energy stake, but right now it is still flat. Here's another stat that I thought was pretty crazy and very interesting. So Schwab did a survey of investment portfolios, and they found that the median portfolio size for an American in 2026 is $350,000, which is up a ton from 2024. This figure has more than doubled over the last 2 years since January alone. So January of this year, it's up 150,000, 75%. To put this in perspective, before 2024, the value never even materially exceeded 150,000. I mean, when you talk about a K-shaped economy, $350,000 is not a small amount of money. Like, it's a lot of freaking money to have $350,000 just based on your investments, whether it's in the S&P or individual stocks, or if you've traded that type of money. So the fact that like American, and this makes sense, right? The American stock market, forget the S&P, which has kind of underperformed some other major indices across the world, but individual stocks have gone crazy over the past 4 years. Like Rocket Lab went from $4 to $80, right? Like that's one example of many examples that are out there. And a lot of US investors took the risk on many of these companies after a pretty epic drawdown in 2022, which led to this massive bull market. So it makes sense that US consumers have that type of buying power. But if the average portfolio is 350, you can imagine why this economy has been so K-shaped, at least in the United States, because if you have that type of money, you're more willing to spend on all these other different things. So when Walmart comes out and has the worst day since 2022 yesterday and says, the consumer is pulling back a little bit, they explicitly said the wealthier consumers are fine, but middle-class consumers were seeing a bit of a pullback, and that's why it was down 9%. They're talking about the K-shaped economy. They're talking about people that probably don't have 350,000 in investment account because they, invested in Rocket Lab a few years ago. And, that's part of the economy that's not actually doing so well, which goes to the point that if we were to get a market crash, median. Yeah, sorry, not average, median. You guys are right. But still kind of crazy, right? That the median portfolio right there is 350,000. If we were to get a market crash, that same level of spend for consumers is likely not going to happen as easily, right? Because now you've got more of consumers saying, hey, we don't really have the money, or we don't even have the money that we can borrow against if you're taking a loan against your portfolio and using it as collateral to be able to spend on your lifestyle, which means companies' earnings probably would come down. Yeah, the average is probably even higher due to outliers. That's fair, especially in America, because there's a lot of money in the United States. So yeah, it is one of those things that I thought was very, very interesting. And the fact that it's doubled over the last 2 years, I mean, it also is one of those things where you can interpret it bearishly and be like, okay, this is too much. We have all this margin debt in the system. Part of the reason these portfolio median sizes grew to this amount is because people were taking on leverage, and S&P is at all-time highs. If we get any hiccup, you have a breather. That median goes from 350 to 320, and you start to see these things start to fluctuate. So you can interpret it in a bearish perspective, but the optimistic perspective is the United States economy, at least for the stock market, is working, and maybe the rest of the economy is not necessarily in the healthiest spot, although the data doesn't really show that. The aggregate data around jobless claims and retail sales doesn't actually show that it's in a horrible spot. There are some slivers of it, but based on the data, maybe all the data is fake, but based on the data we're seeing, it's not a horrible spot. The stock market itself is working, and in the face of an Iran war, the stock market is still working because of the massive amount of capex that continues to be spent. Micron, Sanjay, he was live with Kramer yesterday, said some good stuff about Micron. I think Street's excited about it again. 982, that's up in the pre-market. You're seeing a lot of the other memory stocks get some love. And yeah, I mean, the memory names, once again, as much as I don't love them as long-term investments, I still think they are cheap if they're going to be doing $150, $200 of EPS in the case of Micron in a couple of years. Like, it should not be trading at 7 times forward earnings on that. So I would imagine that Micron gets up to that $1,000 range and kind of holds it as long as momentum and the excitement continues to remain around the concept of memory. And Sunday did the best he could yesterday, explaining to people that memory is not a commodity. It is the epicenter of where AI happens. It's just a question of how much the market continues to still believe that. And if, we can get a little bit more of that momentum. Are you still in Keel? Yes, I have a very small speculative position on this company. I know the insiders have been buying a lot more. We went through the thesis a few months ago around how their data centers are set up for Vera Rubin and how they have more licensing capacity than a lot of these other data centers. It's a small company, though. It's a $2 billion company. I do like that the insiders are buying because, I don't think the insiders are buying their own stock that used to be a Bitcoin miner turning into a data center stock if they didn't think a deal was coming. You had like 3 C-suite executives in the past couple of days buy $100,000 to $150,000 worth of stock. The chief operating officer bought $200,000 worth of stock, and then the chief executive officer bought $196,000 worth of stock. So it does feel like, even if you haven't done the most amount of DD on Keel, if you like the insider buying, you like the neocloud space, and you think that one big deal could re-rate the entire story, there is a possibility for this thing to get re-rated. But the question is, can they get that deal? And I don't know, preliminary research I did a couple months ago makes me think that they're more likely than not to get a deal, but it's going to be a question of them actually announcing it. And then the insider buying makes me think, all right, the C-suite's pretty confident that they could get a deal. But if they don't, then, the stock does nothing. If they do, then you might have a little bit of a re-rating right there. Palantir, that's up in the pre-market. Marvell continuing to make a massive move, 252 off that Google news that we had a couple of days ago. Google essentially putting a floor to the stock, buying it at 207. BMNR, that's up 2.8%. Moderna, that's up 1%. The S&P 500, that is up 0.37% as well. In terms of a couple other headlines, we have the market open in about 5 minutes. NVIDIA, so they're investing in a couple different companies. NVIDIA's investing or in early talks to invest with a South Korean AI company. Yeah, Keel wasn't a bunch of 13Fs. That's fair. Not by like the super, super big guys, but some of these other 13Fs that were coming out, you did see their name pop up. So, maybe the street knows that there's a broader data center deal on the horizon. NVIDIA in early talks with South Korean AI chip startup Rebellions over a potential technical partnership, investment, or even acquisition. Jensen Huang met with the Rebellion CEO at NVIDIA's headquarters this week to discuss. NVIDIA is potentially going to be investing in them at a $2.3 billion valuation. And they've already raised $850 million from SK Hynix, Samsung Ventures, and ARM. And there's another company that NVIDIA is thinking of investing in as well. Cloverleaf Infrastructure. NVIDIA is in advanced discussions to invest several $100 million in Cloverleaf, a company that secures power and powered land for none other than data centers. Cloverleaf has already sold more than 7 gigawatts of power projects to data center developers, including Oracle and OpenAI. The potential deal follows NVIDIA's investments in SB Energy and Lancium as it pushes further into the power infrastructure needed for future data centers. I think this is why Peter Thiel put 72% of his macro hedge fund into energy. It just feels like securing the data or securing the land for the data centers and the energy infrastructure needed to get those data centers up and running. It really feels like that's the next bottleneck, even beyond memory or photonics, because if you don't have that, you don't have any memory or photonics, so you don't have any place to put the GPUs in. So I think energy makes sense. Obviously, there's different ways to play energy. Bloom Energy has been one of the more successful companies that can show alternative mechanisms to get fuel cell technology to work. Chevron, Exxon, those have had massive years massive year-to-date performances because of oil going higher. But I think Jensen's taking it into his own hands to be like, we need the land, we need the energy, we need the infrastructure, we need all this secured before we even deal with the politics of getting politicians to be okay with data centers. And yeah, Berkshire of technology. They have to build as much as this and invest as much as they can to be able to get this stuff up and running. And it benefits NVIDIA because they get to sell chips into these data centers. But that's what they have to do. Jensen basically owns AI at this point. It's basically a venture company. Well, the thing about it, they're not taking bets on companies and hoping they 1000x. They're like strategically putting money in, like that's the whole SB Energy deal they did on Monday, to like actually make sure there's a tangible path and trajectory to get data centers up and running. And, that's what NVIDIA should be doing. They have plenty of cash. They're already increased the dividend. They're already doing buybacks. And so I think this makes sense for them to use that money and keep going from there. Robinhood getting 101 up before the market opens. Let's see if we can hold on to this move and if we can keep it going. It is a Friday. I think last Friday we ended up a little red. So it'd be very nice to hold on to some of this green that we have. Overall, the broader market has been kind of flat this week outside of a couple of individual stocks inside of individual sectors. So if we could get a nice Friday pump, it would be fun. NVIDIA 218 in the pre-market. And hopefully we can hold on to it. What do you think about App11? I talked about this on Monday. I had a call with a former employee. Wow, app down 2% pre-market. Yeah, look, I think this could flush down below 300 because it is a falling knife right now. They need to prove that they can expand their TAM from mobile gaming to e-commerce, which is something management has promised for the past year. The numbers aren't showing it in Q3. And if they don't do that, I think the street will continue to sell it off. So I don't have a position in it. I think the growth is incredible, but the growth being that incredible and the stock being that discounted means the street really thinks their TAM is saturated and they're not executing to expand the pie ultimately, which means, those growth rates are not going to last, which is why it's being discounted. So I think as long as they show that momentum in Q3, you'll start to see this rebound. But until then, it's just taking a risk on management and their ability to ultimately execute. All right. Happy Friday. Thank you all for being here. It is Friday, August 21st, 9:30 a.m. Refute the mute as the stock market is now open. All right. Wake your ass up. Hoodie 102. On the open, my oh my, there she goes. I think it's just a question of holding it for Robinhood, but there it is, 102 up 7% as we open. Wow, we are green across the board. Palantir goes green, Marvell goes green, Coinbase goes green, MicroStrategy green, Micron green, Walmart green, Nabesis up 2%. That is green. Moderna goes up 4%. That's great. S&P 500, massive open right there. 765 reclaim after dropping to 761 yesterday. That is green. Robinhood, 101.86. Rocket Lab, 73.51. That is green. Spotify increased their buyback by $1 billion yesterday, 534. That is green. Ross Stores had a great earnings, up 5%. That's green. Hims up 2%. That's green. Meta, of course, is going to be the red one in the midst of all this green. Meta right there, 543 as the trial continues for their lawsuit, and it will continue over the next 5 weeks. Ondas, that's green. Reddit goes green. Intel's green. Western Digital, that's up 2%. SanDisk, that's up 1%. SK Hynix, that's up 2.4%. Nvidia gets a candle up to 217.90. Hopefully we can hold on to it. Again, the big thing is, can we hold on to this initial green that we're seeing? And I mean, if we do, that's great. But the past couple of days, we haven't really been able to. CoreWeave, 90.19, that's back up to 90, as that is also somewhat green. Amazon goes red. Okay, maybe it's not just Meta. Maybe it's all the Max 7s. Google, not red, but it looks like it wants to go red. How about Tessie? She's had a good week. Tesla, actually almost 350. Wow. Tesla's holding on. Tesla's not doing that bad right there. Microsoft, which fell below 520 this week at 479. Microsoft, why is software's been good this week? ServiceNow almost is at a 52-week high. Like, it's kind of crazy to see Microsoft get discounted right here. And then what's the other one? Apple is red because some of the semis are green. That actually makes sense. Robinhood just below 100, lost 102, now at 99. NVIDIA 218. What about App11? We are below 300. We touched 299. And there we go. Back to 299. All right, App11. I mean, your classic falling knife. This is one of those situations where you have to believe the market is dead wrong about this company and get to buy shares ridiculously cheap and sit back and watch the magic happen when this rebounds. But it all comes down to, conviction around, does it make sense to call the market wrong on this? Rock Lab at 74, ServiceNow 129.93, SPY at 765. Iran actually gets 46. So I think this is, wow, the biggest NeoCloud move that we've seen all day, right? I don't think anything is comparing right here to Iran. Volume might also be a little flat today because it is a Friday across the entire market. Well, they still have Bitcoin on their balance sheet, right? I mean, that might be the reason. Nebius and CoreWeave do not. So maybe that could be part of the reason why. But that is correct. Now it's 52-week high is 194. I meant to say their, what do you call it, 2026 high. The 2026 high was on May 13th. I think they touched 140. If I'm not wrong, they touched 139.20 in May. So, they're only about $8, $9 away from getting back to that 2026 high. But the fact that, ServiceNow is the staple for software stocks and IGV, I'm surprised Microsoft actually went down in the face of the software names getting some love. Yes, Iran doesn't have Iran doesn't have Bitcoin. Really? Didn't they have Bitcoin on the balance sheet? They sold all of it? I did not know that. Keel right there, that's up 8% as well. They do have Bitcoin-related revenues, though, because they still segment that out on their earnings. Let's ask Google. Does Iran have any Bitcoin on their balance sheet? No, they do not hold any. The company routinely liquidates all the Bitcoin it mines on a daily basis, converting it into fiat currencies. Wow. Okay, so that's different from CleanSpark and Marathon. I did not follow Iran when it was a Bitcoin miner, so I didn't know that they don't keep Bitcoin on the balance sheet. But okay, so I mean, even if they have Bitcoin mining segmented revenue, so that's interesting. So then the stock's going up 7%. It can't be on Bitcoin because they're not really benefiting from Bitcoin going higher for the balance sheet. That might mean there's a bit of a more AI specific reason for why the stock is getting a little bit of love. CoreWeave up 1.5%, Nvidia 217. Where is Zeta 2780? The fact that Zeta's been holding 25, I think is very positive. If you got in this thing at 16, 17, 18 bucks, even 2022, it is not losing 25. It's been 3 weeks and it's holding above that level. I think that's very, very important. And I think that Palantir partnership is only going to expand the amount of customers that they work with. So I know it's not at 30 yet, but the fact that it's not easily dropping back into that 23, 24 range is pretty impressive. VG right there, that's up a little bit. ARM, that's up 1.25. Lumentum, that is up 2% as well. Uranium stocks are ripping. The uranium ETF is URA, right? Yes, that is up 3%. CCJ should be up then. That's up 4%. Is Oklo up? Oklo's up 2. Interesting. So you got some nuclear coming into the equation. SpaceX down. They had a 300 million share unlock. Yes, red candle at the open, 132 on Mr. SpaceX. What do we guys think? Do we think it's going below 100? Or do we think it can hold on? Like, there's still another, I think it's like 8 billion shares that have to be unlocked on this company. I just keep going back to the same argument that we were talking about a couple of days ago. Like, if SpaceX is going to hit 500 billion of ARR and exclusively they have a partnership with NVIDIA, NVIDIA is the one that's selling them all those chips at a better margin than what SpaceX can resell it to for their NeoCloud business. Like, I just feel like NVIDIA is the bet there. Granted, SpaceX's market cap is cheaper than NVIDIA's. So maybe it can just move higher. But I feel like in that low 100 range, that's where it gets a lot more exciting. Granted, anyone who said that last time missed it because it ran immediately. So even though it did get there, but you have to be quick to buy it at that point. It's just the problem is stocks are at all-time high. So if you have any little bit of a market meltdown, obviously SpaceX at an aggressive multiple is going to take a disproportionate hit. Tesla right there, 348, which is the fear. Like, the fear of buying any stock at a high multiple right now is that S&P's at all-time highs. You get any hiccup, Robinhood trying to get right back to 102, those are the stocks that might end up feeling a little bit of pain. A lot of people think it's going below 100 by 2027. I mean, we're going to have to see if they can get that ARR up faster than expected. Then maybe that is not how this plays out. ASTS up 6%. That's getting some love. Rocklab, I think, has also been kind of flat, right? No, Rocklab's up 2%, 74.54. It was just at 73.80, 74.50 now. That's green. IGV, that's up 0.5%. Amazon continues to go red. It's been red for the past 2 weeks. Honestly, it had 2 days after earnings. And then since then, it's just been flat to down every day. 288, I think, is where we got to. I don't really know why, other than the excitement of their AWS and growth kind of slowing down. But I think if we wanted to be more technical about it, the semis rallied and the CapEx spenders once again kind of took the hit for the CapEx beneficiaries, even though those CapEx beneficiaries are still down a lot from their all-time highs. As Micron, one of those beneficiaries, goes red. And you see that is now down. CLF, that's up 6%. Yep, you're seeing Cleveland Cliffs, some steel companies. They mentioned Palantir on their earnings. They had a really good partnership with Palantir as well. That's up 6%. Do we have any macro data this morning? Let me see. I don't think we get Canada retail sales were down about 1%. I don't think we have consumer sentiment today. Do we have it? No. Yeah, we don't have anything. Well, we get PMI in like 6 minutes. All right, so we'll look at PMI. That might affect the market, but outside of that, nothing too crazy. Reddit 153, that's getting a little bit more love. Robinhood 103, okay. Let's see. As BTC continues to get this momentum, you would imagine Hood can see some of that. Marvell, someone just bought 2.6 million of calls at 250 at the money calls September 25th. September 25th. Yeah, maybe Bezos is selling some more Amazon too. I forgot that did happen, and that created some negative sentiment as he's buying a soccer team with that Amazon stock. Uber, are we red? We are trying to go red, 79.27. Netflix broke out to 81 yesterday. Netflix now down to 80 as that one slightly goes red as well. Circle is up. Wow, Circle's up 8%. Well, that makes sense because Bitcoin's up. Why is SpaceX red? I don't know, but I would imagine those share unlocks are probably... I mean, I don't know, dude. Maybe it's the share unlocks, maybe it's not, but it's just, again, it's a company with a pretty big multiple, so any level of bad sentiment for whatever reason, or just increased selling pressure, probably creates a... It is weird, though, because it was at 150 on Monday, so like the flip for no real reason that we got this week. Like, if anyone has a reason, let me know, but I don't think there was like a space specific. I mean, if anything, Rocket Lab had a successful launch. Like, there's good sentiment around space right now. Rocket Lab got their $980 million contract. So, you had a lot of good things happen in that sector, but SpaceX right there down about 1.5%. Zeta down about 0.75. Wow, Hoodie going for 104. There it is. I mean, it makes sense. It makes sense. You can't have a Bitcoin breakout like that and an ETH breakout and all these other crypto assets running and not expect Robinhood to be one of the 5 major beneficiaries. Nebius also 230. Okay. You're saying Nebius come back to play. That's up 4%. Got to 211 yesterday, making a little bit of a comeback. Rocket Lab also trying to go for 75. Micron just flipped green as well. Almost everything super high beta. Broadcom, nice little 3% move as well. Getting a green flip. Keel, are we running? 9%. I think those insider buys getting the street to be a bit excited. Wow, Hood's up 10% today. Dude, we are going to get used to these crazy rips if Bitcoin continues this momentum. Now, it will consolidate and dip during that time, but the net effect will be a pretty massive move to the upside as long as Bitcoin continues to grind higher. And that's going to be really fun. But, I think we're all kind of in this moment of is it actually real? Is it actually happening? It's like a big candle, but if Bitcoin drops to 72 over the weekend, Hood's going to open down on Monday. So it's one of those things where you just have to kind of see if that momentum can hold up. But it makes sense. This is one of the assets that should be correlated with the breakout. 105, there it goes. 11% day for Mr. Robinhood. ASTS, that's up 5%. Iran also having a great day, up 7%. Quantum's making a move. D-Wave is up 6. Inflection had a good earnings a couple weeks ago. That's up 6 as well. Rigetti's up 5. Interesting. So Quantum's supposed to kill Bitcoin, but they're running with Bitcoin. Huh. Who do you guys think is buying Bitcoin right now? If you had to pick one or two stakeholders that are buying Bitcoin, do you think it's governments? Do you think it's I don't know, institutions, hedge funds? Do you think it's China? Do you think it's retail? I don't really think it's retail, dude. I think retail, 61 to 77 in 3 days. I don't think that was retail. I think retail is definitely, now piling in, and probably piled in over the past couple of days, but that move had to happen from somewhere. And I feel like there had to be some big players involved. Japan. Oh, Japan might help their bond yield problems if they get something that's not going to be debased like their fiat currency. China, the cartel, Jane Street. Dude, Jane Street, I mean, they haven't played in Bitcoin in a while. They've been stuck losing 15 billion on these semiconductor stocks. Jane Street was the OG manipulator of Bitcoin, and then they went on to start manipulating Micron. So maybe they come back to play with crypto. Robin right there touched 106. Touched 106. Oracle, that's up 3. Ondas, that's up 4. Meta up back up to 550, which is nice to see. Keel up 12%. It's because the bond buybacks. But the bond buybacks, again, it's not creating new money in the system. It's not printing money. Like it feels like quantitative easing, but it's not effectively quantitative easing. So I can understand how that gets Bitcoin excited, but a $17,000 candle over 3 days. Maybe it's the signal that it's sending that Besant is willing to do whatever it takes to get these yields to come down, which means if he has to slosh more money in the system, he's willing to do. And that's basically what he said on CNBC yesterday. And that's when Bitcoin broke 72,000. So yeah, maybe that is kind of that perceptual claim that got everyone to be more excited about what's going on with Bitcoin. The liquidations were pretty crazy, dude. So yesterday when Bitcoin was at 71, it was the 7th largest liquidation in history. 3.5 billion levered positions got liquidated in 24 hours. At Bitcoin or crypto markets in general added 280 billion in market cap. I mean, since then, I think it's another couple hundred billion. So, you know, the money is coming into the ecosystem. We're going to get PMI right now. Let's see what we got. Let's put on the S&P right there. 765. We can get a breakout to 770 today. That would be a massive way to end out this week. The Koreans, maybe the Koreans are back. Where was Kospi yesterday? Kospi was up 1%. Maybe the Koreans are buying. Okay, PMI. Let's see what we got. 53.2 versus 53.9. That's a miss on manufacturing. Services, 56.8 versus 54. That's a beat on services. And composite PMI, wow, 56 versus 53.9. That's a pretty big beat on the overall composite. So it's a slight miss on manufacturing and then 2 beats on services and overall global composite. That's a decent PMI.
S&P global PMIs, all 3, manufacturing, service, composite, in a couple weeks they'll get fine-tuned a bit. We're expecting a number just below 54 in the headline. Comes in a bit lower than that, 53.2, a bit of a miss there, sequentially following 53.9's final read for July. So it is a bit lower, obviously, but it's still a pretty good number. It's an expansion territory. It would be the weakest going back to March of this year when we're at 52.3. We haven't been below 50 in contraction mode in this one since July of last year, 1 year. So that's a good thing. Manufacturing renaissance still seems to be rather healthy in much of the data. We look at the service side, different than manufacturing, much better than expectations. Comes in at a whopping 56.8. That is a strong number, and that would equal where we were in March of 22. March of 22. To find a higher number than that, you're going back a ways. It's hard to have history on the S&P Globals. Suffice it to say, very strong service number. And on the composite, also strong, 56.0. That would be the strongest since March of 22 when it was at 58. So we see multi-year highs in services and composites. Interest rates moving up a bit. They seem to coordinate with the up move in the equities, reversing yesterday's red. We do see that crude oil.
Okay, so PMI not that serious, and you're seeing some more excitement right there come back to the equity markets. S&P basically flat off that announcement, but overall a good PMI. Could it be a little bit of a fear that it's too good, so there's a little bit more inflation? I mean, maybe, but that doesn't necessarily mean that, you know, markets have to sell that off completely. ServiceNow, that's down 1.2%. Okay, you are seeing some red candles in software. AppLovin continues to go below 300. Microsoft's still basically flat. Walmart continues its downturn. Nvidia also barely surviving the green right here by about 20 cents. 217 is what you've got on Nvidia. Micron still up. Okay, so your crypto names, your select memory names, and then none of your software names. I mean, what's the software stock that's running right now? Yeah, nothing. Oracle, which is more data centers. Wow. So software completely gives it up today. Adobe, MongoDB, Atlassian, Datadog, Palantir, Snowflake, all of them, as the semis continue to get most love. But even in the semis, it's more selective than not. Well, there's only 3 that are really red. Marvell, which was actually really green like 3 minutes ago. ARM, and then Intel. Everything else is green, including SMCI, AMD. Dell, Lam Research, NVIDIA, Micron. Yeah, Fear and Greed, let's check that as Robinhood tries to go for 107. Fear and Greed is at greed at 56. We were at neutral yesterday. We are back to greed. I think when the S&P was pushing like 775, we were closing in on extreme greed, so we're not there yet. But we are into that green category. Broadcom 371 up from 359 a couple of days ago. Interesting. Okay, so this price action is a bit more rooted in a lot of momentum, which is what we're seeing right now. Hollis says limited sellers also drives prices up. Yeah, that's fair. I mean, if no one wants to sell their Bitcoin right now, which is like, why would you want to sell your Bitcoin if you think it's breaking out? Wow, hoodie. Oh my. This we have not experienced for a while. I mean, it's a runaway train. She's just leaving. She's leaving the station. Yeah, if no one wants to sell their Bitcoin and no one wants to sell their hood, you start to get a little bit of a move. Is she actually going for a 15% day? It's been a while. I think in July we had like a 10% day, and that faded after like a couple hours. Like, it didn't really have any staying power, but this one feels a bit more legit. Walmart's still red. Yeah, Hood is still down 7% year to date. I mean, that's how ugly the drawdown has been all year. It's just not been Hood's year. Since January, it's just been down. I mean, it fell to like $60 at one point during March. So the fact that it's made this comeback, at least to this extent, is pretty impressive. Walmart right there, 102.78. Walmart. JP Morgan says buy Walmart, by the way. JP Morgan says go buy Walmart, buy the dip. Again, I don't like the PE on Walmart, but at the end of the day, it's freaking Walmart. You're always going to have buyers for Walmart. So I personally don't want to hold this for a while, but I'd rather buy Meta here. But I get why the sell side is saying Walmart's not a horrible bet at these levels. SoFi also getting a little breakout. Let's see if we can see 19 on SoFi. What about Affirm and Coinbase? Affirm is up 1%. Coin should be doing good. Coin's up 9.7. Coin doing great. The fact that Robinhood's outperforming the crypto exchange is kind of crazy on a day where the only catalyst is crypto. But there you go, Coinbase. That is also up 10%. European banks might be buying Bitcoin. Let's ask Gemini. Bitcoin has gone from 61K to 77K in 3 days. Who do you think is doing most of the buying? Okay, Gemini says institutional funds, retail, and a short squeeze is likely leading, which is fair. I mean, there's been about $4 to $5 billion of liquidations. Is forcing automated and manual buybacks that accelerated the price acceleration forward. Macro liquidity shifts in financial conditions and broader global optimism around regulatory clarity provided the macro catalyst for the rapid risk on rotation. That's all the Clarity Act stuff. And the CFTC basically saying, even without the Clarity Act, we're going to make sure that we have legislation here. Robinhood 107.21, SoFi 1880, Tesla also trying to get up to 350. I thought you hate Gemini. Guys, I don't hate Gemini. Just because I use GPT more and Claude more than Gemini doesn't mean I hate it. It's also not Gemini technically. It's Google. It's the Google search bar that ends up going to Gemini because the answers are just so quick in the AI overview thing. So technically, it's actually not Gemini. But yeah, I just don't use it to like have more in-depth conversations. But it's obviously still very useful to try to get answers quickly. Meta 551 Ondas. That's up 4% as well. He literally said it was terrible. Yeah, and having like personal conversations, I don't like it. But if I'm asking a simple question about Bitcoin, it should be able to give me the answer, which is what it did. Like I wouldn't go to ChatGPT and open up a new website just to, like I would just go to the next tab on Chrome, ask the question, and hopefully get an answer quickly. And that's where I use it the most. Tesla 350. Okay. Nice little break above that 350 level. Tesla's basically been stuck in this 335 to 350 range for the past, well, ever since earnings. So I guess past month. Before earnings, that's that drop right there, was at 405. Then July 23rd, you had earnings, dropped to 293. And now back at 350. The Qs, are we getting a little bit of a dump? The Qs are indeed getting a little bit of dump. Interesting. I mean, the problem with the Bitcoin companies is they're not part of the major indices in any meaningful way. So they're not really going to lead the indices to get some love. You're going to need tech to do that. Again, Ethereum ETFs over the past 7 days have attracted $525 million. Bitcoin ETFs have attracted $1.7 billion over the past 7 days. So those ETFs starting to get a lot more of those heavy inflows starting to come in. Moderna, is anyone still in this? Moderna? Whoa, that's a pretty big move. 134 to 148 right there. I mean, there was a lot of money to make going long a couple of days ago, a lot of money to make going short at around that 170, 180 range. So I think that's why the stock has been getting a ton of volume. 14 million shares right there traded on Moderna. You guys think I hate Google because I don't use Gemini, bro. It's not the case. I just don't use Gemini. I just don't feel like the conversations are that great. I'll try it out over the weekend. I'll try like asking more. But I've tried it enough, bro. That's why my opinion was so strong yesterday. I was like, this thing does not like. Maybe I need to try it in a more advanced way. But ChatGPT has me hooked. Navius 227 up 3%. Uber basically flat. Iran losing a lot of that pump, but it was up 7. Now it's up 344. Robinhood just under 107 at 106. Oh my goodness, this 10-year. In the face of Bitcoin doing well, the 10-year has hit a brand new 2026 high. 4.712. Dude, I mean, you're talking about another 30, 40 basis points. We're going to be rounding up to 4.8. It's not going to be fun. But this is why, I mean, again, this is like the thing we just can't ignore, right? It's like that thing you just can't ignore. I mean, like, yeah, Q's going red probably because this 10-year is going higher. And it's like you also don't want to put that much emphasis on it because it's like maybe we can survive as a country with these types of borrowing rates, even though like we probably can't. But like maybe we can, so it's like you ignore it. But then it's like, okay, well, you can ignore a lot of stuff. You're not supposed to ignore that. Like that's the one thing where you don't ignore the cost of capital. We have to pay our bills. We have to refinance a lot of our old debt. And a lower rate helps us do that. Q's right there, 710. Robinhood back at 107. The dollar continues to also go down, which is part of the reason this 10 years surging higher. SoFi, 19. 19 is that also goes up. Can you explain why this is bad? In the most simplest terms, we sell our debt in the form of treasuries, just like Google or Meta sells their debt to investors. And we hope that people buy it and we give them a return for buying it. So they give us, someone buys $1 billion worth of 10-year treasuries. Right now, we give them 4.7% on that billion. We get to use that billion to do stuff, and that person is fine giving away the billion and not investing into SoFi and investing into the US government because they're getting 4.7% guaranteed. That number was like 1.2% 5 years ago, right? The cost of capital was cheap. Then COVID happened. Then we had inflation. We printed a lot of money. So then we had to raise rates. And so fixed income has been having a field day over the past 5 years because, you can get a fixed rate of return on your money for effectively taking no risk. The risk is that the US goes bankrupt, which is probably not going to happen. But the point is, like, what? We're going to be paying people 6, 7, 8% on their money? Like, we have to pay that money back. And, like, we can't afford that because we're not bringing in that much tax revenue. And of the tax revenue we're bringing in, already a fifth of it, 20% of it is going to interest payments. Like, it makes no sense. And at what point does the stock market say, yeah, this is not sustainable, and stocks and the broader economy are going to be in an issue? Because what are stocks? They're just companies that make up the economy if these yields go higher. It's one thing to complain about the 40 trillion in debt. That's like people complaining about that are kind of stuck in this abstract fantasy of they'll one day be able to solve that. It's another thing to complain about bonds and yields because that actually affects the day-to-day reality of the US funding all the services that everyone uses in this country. And so the debt stuff is more abstract. The bonds are like, like that affects mortgages, credit card loans, auto loans, everything immediately, right? And that's why I think there's a bigger emphasis on that. Webull up 7%, JP Morgan. That's up 1% as well. Amcor is flattish. It's been down this week with a lot of the other semi names. And then Tessie continuing to get a breakout. It's kind of crazy that risk on assets like a Tesla, like a Robinhood, like a SoFi 1915, like a Bitcoin are breaking out in the face of that 10-year. You're seeing some of your more blue chip stocks that are not getting break. Wow, Hood 108. What a freaking day, dude. I mean, quite frankly, the reason they might be breaking out is because of that 10-year. And at least in the context of Hood, the market's saying, you know what? This government has no idea how to get these yields to come down. We're buying Bitcoin because we think that is a better hedge than buying the dollar. And Hood is a toll booth on Bitcoin that is purchased. Dude, 14%. We have not had a day like this in a long time. SoFi either has not had a move above 19 sustainably in a while. PMI report giving hope to those who fear rate hikes. Yeah, that's also true. MSTR should be up nicely today. MSTR. Dude, that's kind of crazy. Like Robinhood is up more than MicroStrategy. MicroStrategy has like $70 billion of Bitcoin. It's just like, it's a better business. And it is a business first and foremost with a crypto catalyst. And there's a lot of other catalysts, but that crypto catalyst, when it's back in action, it's pretty monumental. Ondas, that's up 4%. You're seeing some love right there. Elf, that's up 1%. Next Decade, that's up 1.2%. I think our boy Matt Money said he bought some Next Decade in the chat. I was talking with Steve about Next Decade the other day. I think Matt is completely correct on his thesis. This is a $2 billion company. Over the next 10 years, what they do and what they provide when it comes to energy. Steve was telling me a little bit more about some of the internal workings. Them and VG. VG, I just don't love VG's valuation as much, but I think Next is going to be important. It's just not one of those stocks that's like going to go to $10 tomorrow. But long-term portfolio, yeah, if you want an energy play, I don't think it's crazy to have that in the port. And Matt's been talking about this for a while. SoFi right there, 19. MP, rare earths, those are coming back. You got a lot of these like January themes coming back. Rare earths, we haven't talked about those in a while. MP. Remember when Congress took a stake in them? Or sorry, it was the Pentagon. And then Apple also took a stake in them. Like they got a lot of hype. Where did this thing go to? This thing went to 100 in September. Then in January, they were basically pushing 85. Now it's at 58. And you're seeing that one get some love as well. Tesla's still up as well. Tesla continuing to make that move. Doug says the worst part about this Bitcoin run is that we skipped 67,000 in like 20 minutes, so we got 0 memes. That is true. Also, speaking of memes, it's important to recognize. I don't know how many people are, tracking what's going on in the meme coin world, but
there is a separate world of people that exclusively trade meme coins. And I know people will think it's hard to believe, but like it's very real. And there are products that have been developed in the bear market of crypto that have enabled people to trade those meme coins. And I mean, they're growing pretty crazily. And so I think the meme coin traders have recognized that a bottom has been pretty close for a while now, because meme coins have actually been getting a lot more attention. And meme coins are getting attention. Obviously, the majors are going to catch up eventually. And in the face of the majors being down, the meme coins have been running. I mean, people have been turning like $1,000 into $1 million on meme coins every other day. It's kind of crazy. But there's been that crypto culture coming back with these memes. And I think that was kind of a sign that, you know, Bitcoin, Hyperliquid, Solana, ETH, they were also going to get some love. Fartcoin has not. Let's see how Fartcoin is done. We haven't looked at that. But there, you know, there's like a million other fart coins that have actual like communities around them, right? Because meme coins, the moat is a community. And if you don't like that, then, you know, you're probably not meant to trade meme coins. But like the moat is not like, what does the company do? The moat, or what is the coin about? It's more about like, do people believe in this idea? There was a meme coin called WIF, Dog With Hat, WIF. It went from like $50 million to $5 billion. And the meme, this little cute guy right here, it was a dog wearing a hat. Remember when Vlad wore this hat when Robinhood listed WIF on their platform back in 2024? Like literally this, what you're looking at, ran to $5 billion. So the fact that you know, excitement has come back to the meme coin sector, I think is part of the reason why Bitcoin is getting the love. Fartcoin is up 20% in the past 24 hours. I mean, we might be back, bro. We might be back. There you go. Fartcoin up 20%. Now, over the past year, it's down from 92 cents to 18 cents, but it's still up in the past 24 hours right there. Robinhood, are we going for 109? Are we going for 109? SoFi, is she going for 1950? SoFi, okay, SoFi's still stuck at 19. SoFi not really getting that move above 1910. But Hoodie, there it is, 109. Wow. That is, I think that's the best performing stock in the market right now. There it is. Tesla also having a hell of a day, dude. I don't see any headline on Tesla. Are people buying Tesla as a hedge against inflation? Well, Elon did say something yesterday. I mean, Elon did say something about Tesla and SpaceX. I don't know if that's the reason they're buying it. Robin, she wants 110, dude. She wants 110. Let me check the resistance. Elon basically said Tesla and SpaceX can grow faster than like 2,000% because someone made this like projections. He was like, to be honest, I know it sounds crazy, but I think both Tesla and SpaceX will grow faster than that. I don't know if that's why the stock is up, but he is, you know, talking about the hype reality of what could happen for Tesla and SpaceX. Robin at 109 at 110. There's 20,000 shares. That's not a lot of shares, man. 20,000 shares is nothing, dude. That is nothing. Also, Bitcoin's been flat all morning, by the way. Bitcoin, I think what Hood is doing is it's getting the pump that it lost. It went from 100 to 94 yesterday, but Bitcoin ran up like, what, $8,000 since then? So I think Hood is just like catching up to what happened with Bitcoin, because Bitcoin's basically been flat all morning. It's actually down since the market opened. At 77. 5,000 robo-taxis appeared in Nevada. Okay, maybe some robo-taxi hype. Cybercab launch. When is that Cybercab launch event? That news came out like last week that they were having that event. Is it in September? They're doing something in New York too, because I got an email about them doing something in New York. I think they were like inviting anyone who owns a Tesla in the tri-state area or like who has FSD. Yeah, well, that maybe could be creating some excitement. Beginning of September, okay. What is it about October 10th? October 10th is referred to as 1010 in the crypto community. 1010 in the crypto community. Dude, it's fun. I was having dinner with Thread Guy. Thread Guy, we went out to dinner a couple weeks ago. And he's like, yeah, dude, after 1010, everything changed. And in my head, I'm like, what the fuck is 1010? It's like, he's talking like it's 9/11 or something. Like, what is this? And I was like, dude, what do you, I said, oh, that was the day like $17 billion of crypto got liquidated. That was, the glitch day, in the words of Tom Lee. Like, I didn't know the crypto community like refers to it as 10-10. I was like, damn, is that serious? Like 10-10? But I mean, it was a pretty ugly day. But ever since then, right, it's been a bear market for crypto. So yeah, when you hear the crypto people say 10-10, that's what they're talking about. And, hopefully we can get past that and get back to where it was before those levels. Rocket Lab right there, 73 ASTS of 4.3. That was a bad day for anyone who owned BM&R, anyone who owned Robinhood, Coinbase, MicroStrategy, Bitcoin, ETH, Solana. Obviously, I mean, everything just collapsed. And then you had the Trump soybeans. I think it was either on that day or a couple days after the soybean China tweet that created some really ugly sense. I think that was the same day. I think it was a Friday, right? October 10th was a Friday. If it was a Friday, then that was the same day. October 10th. Yep, it was a Friday. Yep, that was it. So you had the Trump China tweet about soybeans, which then on Sunday he was like, I'm just kidding. It's not going to be that serious. But like it created so much negative, like, oh, are we going back to tariff war with China? And you had the crypto liquidations and that, that messed up the end of the year, bro. I mean, a lot of us were having a really good year. I mean, the year still ended pretty decent, but since that day, like I think a lot of portfolios topped that day and they just were on a downtrend until December. And then finally around Thanksgiving, you got a little bit of a rebound, but still it was pretty ugly. Celsius right there. That's up 0.5%. Amit, you're really more like 7-Eleven. Okay. Whoever said that, that's hilarious. That's actually hilarious. It's racist, but it's hilarious. Like some of the most hilarious jokes are a little racist, but that's a good one. That's a very good one. Tesla continues to run 360. Let me check resistance. Robinhood fading 109, but she's trying to get back up there. 360 is 36,000 shares. I'm opening up 7-Eleven just for that joke, dude. I need to open up a 7-Eleven or a Dunkin' Donuts or a liquor store and fulfill my legacy as an Indian in this country. I mean, you guys know my dad had a liquor store. Like, I need to open up one of those. I don't want to be there all day. I just want to open it up. So when someone asks, what do you do? Like, I have a liquor store, Like, I just want to be able to say that. I want to be at a party and somebody like, what do you do? Like, I have a liquor store. Like, I want to say that. I need to feel that at one point in my life. Keel, that's up 3. Wow, Keel lost it. It was at 378. Lost a decent chunk of that. And then Nebius at 224. No, not a motel. I'm not a Patel. The motel is for the Patels. That's all their territory, bro. That's them. I can't do that. They have a monopoly on that shit. Can't mess with the Patels when it comes to a motel. But the Punjabis, the Punjabs, we got the liquor. 130 on service now. Moderna, is that still running? Wow, 152. Okay, so Moderna has the volume and Hood has the volume. I think these are the two biggest names of the day. Both up 14. As SMCI is also still up about 1.7%. Our semis dead. Well, they're definitely not getting a lot of that. The fact that Tesla's running more than the semis. Tesla's so close to 360, dude. 360 has 38,000 shares. What do we think? Do we think it breaks through? I think psychologically, it's been a month since we've seen that. That exciting for Tesla. Trump announced that he's going to be helping out in the beef market with tariffs. Here is an update on what he said today.
He calls a deal to substantially lower the price of ground beef for working American families. The president said on social media that the U.S. will allow up to 300,000 metric tons of product for ground beef to be imported with no out-of-quota tariff. And he said that we have a commitment that this beef will be sold at 25% below current market prices. But all this presents something of a mystery here, guys. In his social media post, the president didn't say who he had concluded this deal with, and he did not specify who exactly had made a commitment to sell that below market beef. Now, CNBC has reached out to the White House with questions about this. We've gotten no response so far, and we are contacting the major beef importers to see if any of those companies will confirm that they are party to an agreement with the White House. We'll let you know if we get any more information, guys. But overall, this really symbolizes the president's concern going into those midterm elections that prices are still too high for consumers, and he's signaling he wants to do something about it.
It does kind of raise the issue of all of the recalls we've had so far this year, Eamon, especially with foreign-sourced lettuce, jalapenos, but even domestically this week, it's been eye drops, and I guess we'll have our eye on beef supply.
Yeah, I mean, the president in his social media post also talked about the overall beef herd in the U.S. There's concerns that that herd has gotten too small. He said this allowing these imported beef stocks to come into the U.S. will help the U.S. domestic herd have an opportunity to grow a little bit, and so sort of increase American food supply resiliency. But, you know, we're still focused on trying to figure out who this agreement is with and trying to solve the riddle that the president posed for us today.
Apparently.
Okay, so we've got some mystery beef with Trump and these tariffs. The interesting thing that he says right there is that, you know, Trump is trying to get consumers to have a bit more affordability. You know, these like things, these interventions with beef or with the Japanese yen, it's not solving the structural problem. Iran just flipped red. That's a nasty candle right there. The war is the issue, right? Like, you get rid of the war, a lot of these prices are naturally going to come down. But the fact that he's doing this to me is kind of bearish for the war ending anytime soon, because if he's engaging in these interventions around beef, it means that he knows that this war is going to last for a lot longer, and he's trying to find external ways to get prices to come down, which obviously, you know, might signal that this war is not ending necessarily anytime soon. Bitcoin just lost about $500. I think that's why you saw Hood just lose 110 or 109.70. Coinbase also just got a red candle. Let's see if they make this Friday easy or hard. I mean, we're only 30 minutes into it, but they can make this Friday a lot harder for everybody. SanDisk just went red. Intel, goodness, bro, below 90. Western Dig down 2. ARM down 3. Lumentum down 1. Lumentum was almost 950. It's not everything, though. I mean, it kind of is everything because you're seeing red candles. It's just some of these names are up so much that it doesn't look like they're going red. And they would have to lose a lot. Like if Hood lost 12%, bro, and gave up everything, that would be a bit crazy. Shopify's up a little bit. But maybe it doesn't surge higher, which is fine. I mean, it's up 12%, right? 764 on the S&P. Tesla, 359.86 is where she got to. 360, they're not letting it. I don't see any headline to give you guys. No, nothing. Nothing. Friday is probably the best reason. I mean, you got a lot of options expiring today. You know, it tends to happen on a Friday. Oklo 42, SpaceX still down about 1.4. Moderna, are we still holding 155, 150? Okay, Moderna's not stopping. That one continues to go. Wow, dude. Moderna, 170 to 130, back to 156. You got the buyers stepping in and not really letting go. Yeah, it's monthly OPEX as well. That's a good point. That is a good point. A lot of these names for the month are expiring. Why is SoFi up today? I think all the fintech. I mean, look, there's no reason for SoFi being up outside of Bitcoin because that's the catalyst for fintechs. And then the question is, does SoFi have a correlation with Bitcoin? And like, not really, because a lot of people don't trade crypto on SoFi, but they do have SoFi USD, and you know they're part of that broader crypto sector, which means if it's a crypto-related company, maybe the algos are just putting it in the same bucket and buying it up. But there's not like a specific reason, I would think. Next decade, that's up 2.7. Iran completely flipped, which is a little confusing, given Nebius is at least holding on somewhat to its green. I feel like a lot of this volatility is going to drive people out of the market. People are exhausted from losing money for no reason. Well, here's the thing, right? The volatility of the up and down in the day-to-day, I hope is not a reason that drives people out of the market. Like if you bought Iran this week at 45 and this morning it was at 47, so you felt like you made money, and now it's at 42, you're losing money. It begs the question, why did you buy Iran at 45? You obviously have to believe it's probably worth
north of $70, $80. I'm just putting a random price target, but like you think it's worth more than that. So the day-to-day volatility, you're not really losing money. Now, if you bought IREN at 45 and it goes to 20, even though technically you didn't lose money because you didn't sell, that's what gets people, I think, to feel like this is a scam. And that's kind of what we saw back in July. Usually when you have those 50, 60% drawdowns, though, they are the best moment to buy, which is very hard for investors, including myself, even after you've had a little bit of experience in investing, to still take those opportunities because it's scary, right? No one wants to put money into something that they think is completely going down the drain. But that's what I think takes more people out of the market versus the intraday volatility. Now, if you're trading, like, yeah, if you bought it for a couple of days and you're losing money, that sucks. But if you're genuinely investing in some of these companies, it's just the nature of volatility that we have to deal with. Yeah, as Doug says, dude, the volatility is not going away with 24-hour trading coming. The NYSE and the NASDAQ basically announced this week that they are planning for that 9 a.m. to 4 a.m. session, which again is not really going to be the market being open because the market will still close at 4 p.m. But right now you can only really trade on like IBKR and Robinhood and I think Schwab and Fidelity on the overnight markets in Webull, but there's low liquidity from 8 p.m. to 4 a.m. and then pre-markets open around that 4 a.m. time. Now there's going to be a lot of liquidity if the NASDAQ and the NYSE and all those players enter into the picture. So there's actually going to be trading volume during the time where, historically trading hasn't happened. I don't think that means, the market's going to be moving like crazy during that time, but there's just going to be more and more volatility, and I think everyone has to, be ready to embrace it. But hopefully it doesn't get people to be like afraid of the market. Like it's a game that like it goes up and down, but it's the most exciting game, and learning more about how that game operates, I think, is super, super important. But you also have to have the appetite and the attitude to want to be curious about how this game works. Venture Global, that's up 1.2%. Tesla, did we get 360? We did not. They are not letting us see 360. It's gonna have to stream while he's showering. Yeah, I mean, dude, there is some peace to the market closing at 4 p.m. Like, as much as I love markets and like, yeah, it's cool that there's like overnight trading, like there is a lot of peace to an opening and an ending of your day. That's kind of how humans are, right? We start the day, we end the day. You have before work, after work, and like it's nice. It's nice to enjoy what you do, but it's also nice to like, when it's done, and you move on to a different part of the day. The thing about markets is even if there wasn't overnight trading, there's so much news that like, if you're covering it, you're constantly inundated in it. But I think it is important for investors to like have that time to separate. Nvidia, did we lose 216? Oh my goodness, we lost 216. This is so annoying, bro. But it's also Nvidia. We're going into earnings. It is what it is. CoreWeave 87. Oh, that's kind of ugly on CoreWeave. It's uglier on CoreWeave because it was at like 110 on Monday. So that's given up the entirety of the move. I wonder if there's some insider selling on CoreWeave, if it happened this week. So whole week was red, wasn't it? Well, let's see. SPY for the week is definitely red. Yeah, it's down about 1.5%. So SPY definitely took a beating this week, which means the broader market probably took some beat. Now, there's some other names, Robinhood, Moderna, et cetera, that had a great week. But overall, yes, the markets did go red. Today, this is our heat map. Tech is down. Software is down. Healthcare and financials, once again, continue to get a lot of the attention. And then obviously energy, given oil prices, are also up. So that's green. I agree, Mitt. It's like I can take a breather when markets close. With that said, are we going to be doing any night shows a few days a week when it happens? Dude, I'm starting to really value my nights and my weekends. Like, I try to just detach on the weekend. That's part of why I stopped doing the Sunday Future show, because like, you want to spend time with family. Like it's those 2 days where I'm like, I'm going to try to just not be that stuck in markets. And I think everyone should, dude. Like, we pay so much attention to this stuff. If you're here market open, market close, I mean, it's like 7-8 hours a day of caring about markets. If you're on X, you're seeing news all day. Like, I think the weekend is a time to kind of get out of it. And it gets you refreshed for seeing all the other news out there. So the market is selling the 20 to 40% growers and buying the established 5 to 10 growers. Seems smart. Yeah, the market's been weird all year with how they've been selling the names that aren't growing for the names that, or the names that are growing for the names that aren't. But it's also like the market has been filled with narratives all year, right? The first narrative is that small caps are back in January, typical small cap effect. You had, Archer and Ondas and all these crazy small caps going up to the moon. Then you had software is dead for the next 3 months, and semi is getting all the benefit in the midst of an Iran war. The entire market bottom. Then the narrative was the ceasefire, semis rebound, software kind of rebounds, but basically has an apocalypse in April. And then you get into the Leopold liquidation in July, which creates a massive opportunity on the semis. But a lot of those names still haven't really recovered substantially, and their prices were pretty artificial on July 29th. You had Citadel calling for a rate hike, which they knew wasn't going to happen. Then you have the software rebound, Palantir, ServiceNow, a lot of these companies, up 50, 70% from the lows. And now we're kind of in this okay, bond yields are screaming crazy. Stocks are at all-time highs. Earnings are amazing. This Iran war is not over. We got midterms coming up. As the 10-year pushes 4.724, this is really not something we want to see. And, now we've got these new different forms of economic pressure on Iran. Rocket Lab just lost 73. That we don't know if it's going to work or not. In the midst of all that, Bitcoin comes back. I mean, this entire year has just been filled with all these different ways to navigate markets. And in the midst of that, the S&P is up about 14%. Wow, NVIDIA loses 215 as well. Dude, how do I buy this 10-year treasury? I'm going to just buy can I just buy as much as I can? Maybe I can help get these yields down. How do I buy it? Someone tell me. How do I buy? Let's ask Gemini, because I hate it too much. How do I buy a US 10-year? I'm going to get this damn yield down myself. Fucking Besant can't do shit. To buy a 10-year treasury, you need to buy the underlying, the yield is the end of the... I need to open up Fidelity. Oh my gosh. I don't have Fidelity. Why can't Robinhood let us do this? Wait, doesn't Public let us do this? I think Public, you can buy it on Public. You can buy TLT. What if I buy TLT? Is that the same? Dude, TLT has been stuck for a while. This was supposed to be the play on rates coming down. TLT 0.27. No, buying TLT is not the same as buying a 10-year treasury note. While both hold U.S. government debt, they behave differently. What about SGov? What about SGov? Buying SGov is completely different from buying a 10-year note because that's a 3-month treasury bond. Okay, I need to open up a Schwab or Fidelity. Dude, we all need to come together and get this stupid 4.7% yield on our money and buy these damn bonds. This is getting kind of crazy. The Sense 4 billion didn't do shit about this. Go to your bank. Imagine I walk into Bank of America. It's like, the yields are too damn high. Take all my money, put it into a 10-year right now. Right now. Yeah, Public does let you buy them. That's true. I don't have any money in Public, though. Maybe I put some money in Public. Just buy these damn yields. Or buy these bonds. Yeah, wait, where's Buffett? 4.5%. He should be ecstatic about this. He should be buying this up left and right. Especially that 30-year. I mean, he's freaking buying Google at all-time highs. The 10-year's done better than Google over the past couple of weeks. You're just going to make the government more irresponsible. We need to reduce spending. I tried to publicly show my support for Doge. I thought that would be at least a small way for me to contribute, but that did nothing. Dude, I don't think we're ever going to stop spending. It's not happening, guys. We're not going to stop spending. We will continue to spend into eternity. We just need to manage our debt in the process. Not solve our debt, manage it. And we definitely need to manage our bonds and the yield they're giving in the process, because we're not going to stop spending. NVIDIA 215. I mean, whether it was Kamala or Trump or JD Vance or AOC or whoever's in there in 2028, they're going to introduce spending packages that are massive. It's just not stopping. It is not stopping. 214.75 on Nvidia, which is a bull case for stocks, right? You buy stocks because it can inflate faster than the rate of inflation. So that is your hedge. Obviously, that's kind of been the core thesis on Bitcoin, which it hasn't necessarily followed, but maybe, who knows, it could start following that. S&P 765. But still, you can't have the cost of credit get to a point where the market starts thinking maybe we don't need to buy stocks anymore. Or maybe the U.S. doesn't have their fiscal house in order to the point where we're afraid to bet on U.S. assets and companies that are there. And again, it's very aggressive to assume that. But then again, the cost of capital actually affects companies on a day-to-day basis way more than like the 40 trillion in debt we have. And that's something we can't forget about. Did Tesla hit 360? Dude, what is the news on this? Okay, there you go. Congrats to people heavy in Tesla. The order book flow looked like she absolutely wanted to break above 360, and there you go. There's only 20,000 shares waiting. I do not see a headline, but we haven't had a 5% day on Tesla in a while. Moderna's still up 17. As that continues to go up. Ray says, I was told if you have to take out a loan, you have to pay it back. Not if you're the USG. We could just keep on kicking that can down the road. But we got to do it with yields that are lower than this. Do bonds and interest rates move in opposite direction? Isn't it better to buy a bond if you think interest rates are coming down? I mean, theoretically, yes. But obviously, no one thinks interest rates are coming down, right? We think interest rates are going up, which is why it's part of the reason why. Like, if you think interest rates are going to go up, you think the yield you're going to get on a bond is going to go up. So technically, you don't want to buy bonds. The only way I think that we can get a mass participation of buying in the credit markets to get those yields to come down, since yields go down when you buy the bonds, is the perception of inflation, which all goes back to this freaking Iran war that, we haven't necessarily resolved yet. Robinhood loses 109 at 106, still up 12% on the day. Next decade, that's up 2. Then DRAM. Oh, DRAM, dude. DRAM's been getting a ton of inflows. Like a ton of inflows. The stats, I saw it on it yesterday. People are buying a heavy, heavy amount of memory. Retail investors bought 28 billion of DRAM over the past 2 months, even though it fell 28%. It's up 98% in total. And then RAM, which is 2x leverage long memory, saw about 1 billion of inflows since its debut on June 24th. So that memory trade continues to collect a lot of volume and momentum. Tesla, did she hit 361? She did. 361.65. Wow. On a Friday for Tesla to make this move doesn't happen that easily. Ducky says they do pay their loans back by printing more money. Exactly. We pay our interest and our loans back by printing more money, which basically is kicking the can down the road infinitely. And this whole refinancing, the long end for the short end, I mean, like it's all a financially engineered game to just be able to manage. Raising the debt ceiling, which we said 15,000 times we're not going to raise. Every administration is like, we're not going to raise it. We're not going to raise it. Guess what? If you don't raise it, we can't take out more debt. So you have to raise it. Like it's all a joke, quite frankly. It's just the joke stops being funny when the yields start creeping up. And we can manage that. Like we can easily manage that. We can't manage the 40 trillion of debt, but we can manage the yields in the short term. And right now, we're not even managing that. Oracle, is that slightly up? Oracle 145. At least that's getting a little bit of love right there as well. By the way, Trump appointed a former JP Morgan Chase executive called Matt Zames. I don't know if you've ever heard of this guy. I've never seen him. To advise the Social Security Agency. So this guy, Matt Zames, which, by the way, we haven't even talked about Social Security. That shit's running out in like 10 years or less. I think it's 2032, right? That's the number. That's the year where it tends to start really looking like it's going to run out. Oh, my goodness. Oh my goodness, Ken Griffin. We have shed more than 80% of our aggregate risk on the situational awareness portfolio. Oh my goodness. They pumped and dumped it. They bumped and dumped it.
That he's talking about the firm's purchase of a material portion of situational awareness's portfolio of equities and derivatives in July. He goes through that story basically. Overall, Griffin says to investors that the multi-strategy fund finished up the month 5.94%, bringing year-to-date performance to 12%, which gives you a sense of how they're doing on it. He said that on July 29th, we entered discussions with situational awareness, something that David has reported a while. There is some news here, though, that I just want to highlight for you. He did say in this letter, we have now successfully shed more than 80% of the aggregate risk from the original portfolio. In this effort, we have completed nearly 100 block trades totaling over $4 billion in market value. These included the largest intraday block trades of the year in 10 different names. In the United States, we quickly exited the vast majority of the Vega risk, saving substantial capital in the process. Of the remaining positions in G10, only 5 have a gross market value greater than $250 million. The letter then talks about, David, how the transaction of this magnitude could not have been completed without the coordination of the trading and the prime brokerage teams at the banks serving both firms.
They pumped and dumped it. He got the market to be afraid for an imaginary rate hike, took out Leopold, and then shed 80% of risk, which means I don't know if he sold Nebius at 280 or 230. He definitely sold it higher than 147, which is where he got it at. Same with Sandus, Bloom. I mean, Bloom rallied to 250 the other day. He got Bloom at 160. Like, again, he probably didn't get the exact top, or maybe he did, but if 80% of the risk is gone, no wonder some of these AI names have kind of been choppy, right? Like, Citadel didn't hold on to them. They bought them really cheap in a really, egregious liquidation event. And then I guess they waited a week or two. And during that week or two, they probably had thousands of trades, right? It probably didn't happen all at once. And they took profits.
Is very grateful and has said basically he has built his, the business to be able to do something like this, something that uniquely I think Citadel he feels can do.
Well, they were uniquely positioned to do it, of course, as having reported on it minute by minute during that the night prior and all through that day. People will be aware of my reporting that I thought situational awareness was very close to potentially selling its very significant stake in Anthropic to create liquidity, only to pull that back when Citadel was able to step up for the entire, more or less the entire public equities portfolio. They had been marketing, other firms had been marketing parts of it as well. But to your point, Citadel's ability to actually say, we'll take it all, allowed situational awareness to keep its private book, not sell its Anthropic stake, and to get out of that and all the leverage that came along with it.
The distribution of positions. And I guess what's new here.
Yes. The fact that they're through 80% of what they acquired.
Over just 3 weeks or so?
Yeah, is interesting. You put it in the algorithm, you work it through. It takes a little while.
You're seeing all the semis dump on this. I mean, it's a slap in the face to a lot of the semiconductor stocks right here. I mean, it's really smart for Citadel because why not, right? It was a great trade for Citadel. But sentiment-wise, I don't know. I don't know how the market's going to interpret it. I mean, long term, if these companies have good fundamental earnings, it shouldn't really matter. But the point is, it was just like a move that took 2 weeks to execute and made them 5.9% in a month. But it did not signal any long-term confidence that Citadel has in actually holding on to these semiconductor names.
Well, people have been speculating as to how far through they are that, and of course also about how much money they made on it. So the numbers had been reported by some others previously, up roughly 6% for the fund during the month.
Yeah.
But you would imagine a good amount of that performance was due to that particular opportunity that Citadel was able to take advantage of.
Yeah. Only Citadel could have delivered a solution on this scale, on this timeline, and then he thinks their COO, their chief legal officer, their head of equity, quantitative research. I mean, this will go down as a moment, right? In
No
the
doubt.
in the AI and the
No,
whole
no
AI
doubt.
trade.
And we'll see. There could be more. Not to scare anybody, but we got to keep an eye on it. It's there's still some pressure out there in certain areas. So.
I mean, it reminds me a little bit of like the Jamie Dimon, JP Morgan during the crisis coming in. I know it's a different scale and it's different, but when you have, you.
But it did contain it. To your point, it did. It took care of it very quickly. And there was a potential for potential losses at prime brokers and the others that did not happen if it had gone differently. So there is something to that.
Yeah.
That said, it wasn't going to be systemic. So
no, but still good for Citadel and its reputation.
Yeah. When we come back, Jefferies chief market.
Dude, the thing that makes this the worst, as someone points out in the comments, do you guys remember last Monday what Citadel said? Yeah, this right here, August 11th. This is kind of crazy. We believe systematic buyers are getting ready to load up on stocks again after a massive unwind. And then if you read the note that they put out, the stocks that they're talking about are the stocks that got destroyed in July. That day was the day your semi names that are really, I remember that day, August 11th. That's when Bloom hit like 250, right? Like that's like, or 235-ish. I mean, Ken, mother effing Griffin, dude. Talk about ruthless. Liquidates a 24-year-old kid, buys all of his shit on 40, 50 cents on the dollar. The reason he got liquidated is because he creates the fake scare of the rate hike, buys it all up over the next 2 weeks, tells everybody AI is real, revolution's happening, everyone's buying these stocks again, dumps it, sends a note to his investors saying, we finished 5.9% over the month and reduced 80% of our exposure on the situational awareness book. I mean, it's Wall Street, right? Marvell down 6%. Yeah, like why is Marvell down 6% from 250? Because Griffin just sold all the stocks that are in that Marvell bucket, effectively making you think that, the big guys don't really. I mean, look, if Ken Griffin had actually held on to he got Nebus at 140, right? Like, I don't know. If you think this whole AI revolution is super, super important, you would think you got a steal of a lifetime. And I know Citadel has to focus on risk management and all that stuff, but because of the anomaly of this event and that, like, when Buffett got Bank of America at like a couple dollars in 2008 or Goldman Sachs, like he held on to those names for basically a decade or more. I know Buffett's not the same as Ken Griffin, but the point is, like, he thought he was getting such a steal in 2008 on his terms that he had no reason to sell. Griffin, I mean, I think the signal he's sending to the market, and he could be wrong, but the signal is we don't think we got a steal on any of this. We just got a really good deal. And we're taking our profits, but we don't feel comfortable owning Bloom at 160 or Nebius at 140 or SanDisk at 900 because there's too much risk and volatility in these names. Whereas obviously Buffett can feel a lot more comfortable owning a bank over 10 years because there's not that much volatility. And so I think that headline alone is probably why you're seeing some of the high beta names get compressed. And Veda right there, 214.80. And you're seeing some of these names now go down. Yeah, 2 weeks from now when semis dip even harder, Citadel. We think the semis are cheap and undervalued. I mean, like, they might just do the same playbook for the next few years at this point. This is wild, dude. I did not expect to see that 80% of the book. I mean, the book was like $16 billion. $16 to $20 billion. 80% of that. Yeah, well, there's also true. There was also leverage involved in that. That's fair. But that remaining amount at the prices that they got it at, I mean, it's pretty aggressive. Market makers shouldn't be hedge funds. Well, I mean, this is why we did that podcast on basis points with the ex-quant who kind of explained what Citadel's goal is and what these market makers try to do. Ultimately, they're trying to give you the best prices for consumers, right? It's just the way they get there is through quantitative strategies that allow them to be as efficient as possible. The problem is because there's a hedge fund involved in Citadel, not just a market maker, they have an opinion on the market. And if they have an opinion that semi stocks are cheap or overvalued, they can express that opinion and market make at the same time. So that's where you get some of that manipulation coming in. Nebius officially going red 218 as that loses 220 on the day. By the way, Chad will be on basis points. It's not coming out today. It'll likely come out on Saturday. We didn't have a regular episode with me and Steve, but we have the Chad episode probably coming out tomorrow. But that was a fun episode. And he talked about OpenAI, Palantir, what's going on in the world of AI, tokens, consumption models. So I think you guys will enjoy that. That'll be out tomorrow. Can you talk more about the thesis behind Keel? The simple thesis is I think they can get a deal, and it's a small company. And I think, they can re-rate a couple billion in market cap. I mean, this stock was at $7 at one point, right? The insiders are buying. I think they can get a deal, and their data centers are fully equipped to handle Vera Rubins. It's a very small thesis. It's a very small position, but that's the idea. Now, on a day where you get this news by Ken Griffin, every neocloud like a Keel, Iran, flipping red, all of these, it's going to be hard for them to hold up. That's crazy, dude. Absolutely freaking crazy. 80% of the book is gone. I expect Chad to roast you in the episode. Oh, trust me. He roasted me for sure. I said he worked in one of the first data centers. He was like, dude, you have no idea what you're talking about. I was like, this is true though. He worked in like a data center at IBM in the 1990s. He was like, that was not the first data center. I was like, okay, that was one of the first data centers. He was like, no, like data centers have been around since the 70s. I was like, yeah, but in the 90s, you're probably in the first 50,000 data centers. It was hilarious. But, data centers have come a long way to what we're building now. But he's been in there for a very long time. 79.54 on Uber, Reddit at 152. Man, I think that headline kind of just took out a lot of the risk appetite today. I know Bitcoin's still holding 77. How long until Ken Griffin starts issuing notes on telling people to buy crypto? It's the next major financial revolution, and then just dumps it after creating even more hype. I mean, I would expect them to do that, right? If crypto is the next wave, they're going to put out some notes saying we think Bitcoin to 150 or whatever, get a lot of excitement, and then probably dump 10, 15,000 from here. But yeah, that took the wind out of some of these AI names. Tesla 357. Tesla lost 360, 361. Hynix just went red. Nebi is kind of flirting with this 220 level, trying to hold on to it. What do people think about Nebius's price action? Like if you have a heavy Nebius portfolio, like I asked Neil about this. Neil was one of the earliest Nebius investors I know. And I mean, his argument was like, it is what it is. It's the nature of volatility. Obviously the dilution was this week. You have the New Jersey data center thing this week, but 280 to 220, does that feel exaggerated? Or do people think it ran up to 280 for no reason anyway? So it was bound to like take this drawdown. It's just, the dilution news never helps, but it's also part of what has to happen. Good for covered calls. That's fair. Because those premiums, were pretty aggressive all of last week. That's just how Nebius works. It's been moving like that for the past 4 or 5 months. Yeah, it was 20 last year. I mean, that's the thing, dude. Like the thing is, it's normalized this $200 range. So everyone wants to see the next leg up, but it was $20 last year. It's one of those things. I mean, so was Hood. Hood was $27 in January of last year. So it's like, as much as we wanted to break out into the 120s, 130s, it's like it's still up 5x over the past year, which is not something you can complain about. Google 343 as that flip screen. How do you decide to take an L on something? If you just stop believing in it, you take an L. It's really not that complicated. Like if you stop believing in a stock or a thesis, you sell it and you move on. Like I think everyone has to remember you're going to have losers if you're playing this game. No one has winners forever. Like every big investor. I mean, Bill Ackman took a $400 million loss in 2 months when he lost conviction on Netflix back in 22. Leopold just took like a $40 billion loss. You know, like it happens for whatever reason. You get over leveraged or your thesis doesn't play out. Now, there's a difference between having a long-term thesis on an idea that you know is going to take some time, and you tell yourself up front it's going to take time. Palantir, Hood, Rocket Lab. Rocket Lab was stuck at $3 for 4 years after it's backed. Palantir is stuck for 2.5 years. Robinhood stuck for 2.5 years. Like some of these names are just stuck for a while. And if you continue to believe in what's happening, you can, spit at the market all you want. Eventually, the market's either going to agree with you or disagree with you. And at the time where it's disagreeing with you, you have to ask yourself, does the market not understand something that is happening? And if it doesn't, for whatever reasons, not even because it doesn't like the company, but maybe because it's just so excited about Micron that it doesn't care about anything else that's going on in the world. But eventually, things reverse, there's a pendulum that swings. And, the names that you care about, if they continue to execute, they will be rewarded because there's too much liquidity in the markets. Like that's kind of the thesis I have on it. If you believe in a company and they're executing, it will be rewarded. To me, it's inevitable because there's not enough good opportunities in the market, and there's way more money chasing fewer opportunities. I mean, there's realistically like 100 really good companies to invest in of 5,000 public stocks. And so I think if you lose faith in it, that's when you sell. But I don't think you sell because of price action. Now, that's a reason why a lot of people sell. I've sold before because of price action. It sucks. It's annoying. It's opportunity cost, all that stuff. But you sell when like Lucid. Like if I bought this in 2021, like by 2022, at least by 2023, I would be like, okay, the thesis is broken. You're out. And it would have made sense because the company's not executed. But Ondas going from 15 to 8. I mean, like I think Ondas has continued to execute. Yeah, they took a 50% drawdown, but like that's the nature of buying an individual stock. If you believe in Ondas, you bought it at 15, you start buying it at 8, build a position up to 11, and then when it breaks out, you're going to be happy. But it really comes down to conviction. HIM's right there, 33, as that's getting a nice little move right here. This got to 27 a couple days ago. Yeah, Marvell. Yeah, great example. Marvell 162. I mean, price action took it down from 330. That sucked. But then you get this Google news. Like, if you actually understood Marvell and didn't just buy because of freaking Jensen saying it's going to $1 trillion, you could have held on to it and continued to ride it higher. Oh, we do need a song of the week. We will, at the end of the day, we'll do a song of the week. We'll do a song of the week. Yes, I do not own Bitcoin. I own Hood as my proxy to Bitcoin. I've never really owned Bitcoin. I've like traded it here and there, but I've never been a full coiner, I think is what they call them. Like a full coiner, someone who actually has like a full Bitcoin. I've never had that. MicroStrategy, that's up 7. VG, that is flat. That's what I do with MicroStrategy. I started at 192. My average is now 133. I mean, look, it's been an ugly ride on MicroStrategy, but you're not that far away from break even. And again, it came down to conviction. Like, did you believe in what Saylor was doing? Okay, I've heard the Stacy's Mom song. That's not a new song to me. Stacy's Mom has got it going on, right? Yeah, I played Guitar Hero when I was younger. There was actually a lot of these 80s songs. What was that other one? Jesse's Girl. How did that thing go? I wish that I had Jesse's. Yeah, I wish that I had Jesse's Girls. Yeah, some of these songs I remember. Shout out to Guitar Hero, but I need to learn a lot more about these new songs. Wow, Griffin really liquidated the portfolio. That is crazy, man. Manhattan rents hit all-time high. Let's take a listen to this as we're seeing the housing market obviously, continue to be stuck and affordability continue to be one of the biggest concerns here.
How many square feet?
It's a penthouse in Tribeca.
Yeah.
But
I don't know how many
conceivably the renter made the purchaser in a different world.
In this case, he said the renter was absolutely a potential buyer who was like, look, you're paying $300,000 a month. The pied-à-terre tax is probably a portion of that on their new place. It's more of a sort of emotional, psychological thing. But it clearly, when this is an annual fee, an annual tax that you're paying on top of your property tax, which David and all of us know have gone up dramatically over the past 10 years, a lot of people are just saying, I'm gonna rent. And the fact that we've had the lowest rental supply since 1968.
It's incredible. That said, does this ultra high end put real pressure on the rest of the market as well, or is it sort of operating its own little world?
It's unclear what the direct impact is. The fact is, a lack of supply is a lack of supply. On the lower end, you've got the rent freeze affecting $1 million rent stabilized apartments. And so if you're a landlord that owns multiple buildings, your rents are frozen on one side, you're going to raise the rents on the other side. So you've got the affordable issue on the bottom because of lack of supply from these regulations. And at the top, you've got the wealthy coming in. I think it's all part of the same thing. Plus, you've got the interest rate environment causing it to be unattractive on the lower end.
Yeah. Mamdani promised lower rents and more affordable city.
Not yet.
And we get record highs.
Not
Thank
yet.
you, Robert Frank.
Thank you, guys.
Yo, Sarah does not like Mamdani, bro. Sarah does not fuck with Mamdani at all. At all. But yeah, as the rents continue to go higher, right? Mortgage rates past 6.7% this week. It's not something that we want to see. And it continues to add to this unaffordability crisis. The only way to solve this is to get rates to go down. The only way to get rates to go down is to get this Iran war to be over so that oil can come down and inflation can come down. It all goes back to that war that is not coming down. So this was Leopold's 13F. This was before Ken Griffin took everything. So I don't know how much of this he owns. All of this was over-levered. All of this was over-levered. But there's still some remaining stock. He's put in his letter to investors that they still have a remaining stock position. They just had to sell a decent chunk of it. So you had Nebius, $1 billion worth of Nebius, TSM, $1 billion worth of that, Bloom, $1.8 billion worth of that, Micron, $5.5 billion. They bought 4.8 million shares in Q2 of Micron, which took a 40% decline in July. They bought 1 million shares of SanDisk in Q2. They bought 7.8 million of STM, 1.9 million of Applied Digital. They had Riot, they had Shaz. They sold 2.5 million of Iren. CleanSpark, they kept the same. They added another 6 million of Keel. Nebius, they added 4.5 million shares. That was basically like 5% of the company. They had some calls on Bloom, some calls on TSM. BitDeer, they had 3.3 million shares. I mean, a lot of stuff that's just super high beta that obviously got wrecked in July. And, Griffin basically took his profits after taking it from Mr. Leopold. Do you think it's a good thing that Ken Griffin sold? Now there's no risk to him selling? Yeah, I mean, technically that's the bright way to look at it, right? Now that it's over and he's sold already, there's no necessity to worry about him selling again. It's just, I mean, realistically, I think it's a little more annoying versus the market thinking that, okay, it's over. But look, at the end of the day, if these companies execute, like whether it's Ken Griffin or not, like the market's going to bid them up. It's just, I think the story of how it happened is more intriguing. I would think a year from now, no one's going to care that Ken Griffin did this. Like if they do, that means these companies like failed on their fundamentals. It's just kind of incredible to see how it happened. Salesforce, are we getting some love? Salesforce. Wow, Salesforce 210. Okay, Salesforce and ServiceNow. Shout out to all my software people. If you're in these, it's been a tough hold, but past month, I mean, Palantir basically got their 40% in a week. Salesforce and ServiceNow, it took about a month and a half, but they're also up around that 40% range from the lows. As you're seeing a move right there. Rocket Lab still down on the day. ASTS still up 3. SpaceX flipping green. As that's up 1%. Yeah, the New York rent thing is interesting. I don't think that's going to stop anytime soon. I feel like New York and LA are just becoming more and more unaffordable. I mean, there was this article, we didn't cover it, but it was a couple of days ago that said like these OpenAI employees are having a hard time paying rent or finding like a home to buy, even with their OpenAI equity. Because first of all, they have to pay taxes on that equity. Like that's the big thing.
And like, you know, taxes in California is 50% of your equity is gone, or 50% of the gains are basically gone. So that's one thing. And then these homes, you know, they're becoming rather unaffordable, even if you do have a ton of equity from working at a startup, because everyone has a ton of equity working at a startup. So everyone's bidding up the prices. And so we talk about affordability, and it's like, okay, even if like people who are just entering into new wealth are having a problem finding homes, like how can we imagine someone who's trying to buy a $400,000 house to easily be able to finance it? And ultimately rate cuts are, you know, part of the solution to that. Palantir getting a little breakout. Maybe that's moving with Salesforce and ServiceNow, just all the software names getting some love. Palantir 176.51. Nvidia, did we flip green? Nvidia, no. We are continuing down to 214. I could see Elton John really suiting a Mitz vibe. Imagine him singing Rocket Man. I don't think I've ever heard an Elton John song. I know who he is, but I don't think I've ever heard one of his songs. They are unaffordable because 25-year-olds don't deserve to own luxury living in the most desirable cities. I mean, that's one perspective. If a 25-year-old has like 5 million of OpenAI equity, you know, they're probably going to try to buy a home that they can have. But yeah, I mean, the prices in and of itself just continue to surge. And it's not, because you also have a lot of old money in California. Like you have a lot of new money in these startups, but you also have a lot of old money that wants to bid up those houses that have, you know, worked at these companies and just appreciated equity over the past 20 years. And so you have those two sides competing to bid on a lot of these different assets. Elton John was in Lion King? Really? Elton John Lion King? He sang a song on Lion King? Circle of Life and I Just Can't Wait to Be King and Can You Feel the Love Tonight are Elton John songs? Did he sing them? It says he wrote the lyrics. Oh, no, he did. Oh, wow. Okay, so I have heard Elton John then. Lion King's a banger, bro. Lion King's a banger. Absolute banger. I think that was one of the first movies I ever saw from Disney. Like, I literally have a memory. It's hard to have memories when you're like 3 or 4 years old. I have a memory of being in our apartment at 4 years old and watching Lion King with my mom. Like, I really have, it's like a hard, vague memory, but like if I really think hard enough, I can remember what that looked like. I think that was one of the first movies I watched. I actually watched it like a year ago because I hadn't seen it in a long time. It's a good one. Hakuna Matata, yeah. I cried watching it. I don't think I cried. Actually, maybe I did. When the dad died. Oh, I saw Lion King with my mom at Broadway too. I remember I took her for her birthday last year. It was pretty boring, dude. The Broadway show was fucking boring. And the problem is you can't check your phone when you're in Broadway, bro, because those guys are crazy, bro. You take it out for a millisecond and they'll come up to you and tap you on the shoulder. I'm like, bro, relax. Like, we're in the back. Like, me looking at my phone for 2 seconds is not going to stop the show. I was with my cousin too. We went to see the Hell's Kitchen, the Alicia Keys one, and she ended up checking her phone and the security guard came up to her. It was so funny. She was so mad. She was like, dude, it was like a millisecond and they like, but yeah, Broadway, you can't have your phone out. Palantir 176, Nvidia back to 215. I've seen Aladdin on Broadway as well. That was good. I've seen Aladdin like 3 times actually on Broadway. That's a good one. Yeah, it's kind of weird that SpaceX is dumping, or SpaceX is pumping while Nvidia is dumping. Maybe SpaceX already took a ton of selling pressure throughout the week. And that's why you're seeing some of the pain right there. Spotify, that's up 1%. Target, that's up 3.8%. Microsoft is up 1% as well. I remember when I took my first steps, everybody was clapping. It was very profound. Okay, ASO, I know you're being sarcastic there, but I genuinely remember sitting in the living room of our first apartment watching Lion King. It's hard to remember stuff from that age, but I have some distinct memories from that time. Meta getting a little bit of a move, 553. Let's
It's 11 a.m. We don't have any major headlines. I think this Ken Griffin thing was the big thing. Tesla also rebounding after it fell to 357 when the news came out, 362. That is up 5% as well. Let's get some comments on this Broadcom financing, as we now have $100 billion of new debt entering into the ecosystem.
Another big financing deal here,
Yeah.
potentially.
Exactly how I was just going to say it. It's making its biggest move yet to finance the AI boom, and largely this time off its own books. So CNBC David Faber has confirmed the chip maker is in talks to raise more than $60 billion. Faber's even saying close to $70 billion in debt for a new AI chip deal, a package that could reach as much as $100 billion. The story was first reported by Bloomberg, so that's where that $100 billion number it came from. But it would benefit Anthropic and other customers. One caveat, though, is that the report says it looks very similar to the XPV platform Broadcom launched in June with Apollo and Blackstone, but the company actually hasn't confirmed that part to me just yet, reached out. The structure, though, this is, where it gets a little complicated. The debt doesn't necessarily land on Broadcom's balance sheet. A separate entity raises the money, an SPV, buys the chips, and then leases it back to the customer. Broadcom.
Ed Zitron's going to have a field day with that. I mean, it logically makes sense. It just, once again, goes back to circular financing and why Broadcom doesn't want the liabilities on their balance sheet.
Job is to guarantee part of that debt, and that guarantee is where the risk sits. Broadcom isn't lending the money, yet it's on the hook if customers can't pay down the line. The CEO has pushed back on the word, backstop. In June, on the earnings call, CEO Hock Tan said the company simply provides the chips and partners with firms that have the balance sheets to fund them. But analysts say Broadcom is also guaranteeing the value of those chips if a deal goes bad. Bank of America estimates that exposure could reach $370 billion by 2029, while calling the likely loss, though, manageable. $300 billion, manageable. It's not alone. NVIDIA is doing a similar thing on a bigger target, more than $500 billion, but standing further back and backstopping up to a smaller slice of the pie, up to 25%. Meta pioneered the off-books approach last year, raising about $27 billion for an AI data center. It now leases back with Blue Owl. Wall Street is relatively split. There's not as many reports, maybe because everybody's on vacation. It's Friday, but Wolf analysts call the backstops a, quote, form of reinsurance, safe unless the whole industry overbuilds. The bond market has been a little bit more nervous. You can just see just by this greed chart going up, spreads have widened over the last few months. The logic, though, holds. While compute is scarce, the question is what happens the day the industry just builds too much, when there's no one left to release to, and the guarantees actually come due at once, Carl.
KP, when Jensen does speak next week, is the conversation going to center mostly around chip innovation and Feynman and Vera Rubin and all the rest, or financing?
I would assume that it has to do with Feynman and just the next generations, because that is accretive to their guidance, and that's what people want to see. Like, how are numbers stacking up? Yes, the financing is going to come, but those were the $500 billion amount that I mentioned. That's MOUs, and it's not even definitive. We don't even know how much money those six financiers, BlackRock, Blackstone, Goldman Sachs, have actually raised at this point. So I think that if anything, Jensen Huang is just going to change the narrative, make sure that we all don't think it's circular financing, that they're going to be at risk down the line, which was the point of this story right now, and more so focused on the actual chips that are going to be going out into the market over the next 3 to 6 months, and how that changes their revenue, and whether there'll be a more than $3 billion beat, which is the market has come to expect every single quarter now for NVIDIA.
Yeah, it's going to be a huge, huge day. Christina, thanks.
Thank
Christina
you.
Partsinevelos watching the chip.
Right. More money entering into the ecosystem for Broadcom. Ultimately, it's good for these compute names because there's going to be more capital going into them, but the holding it on an SPV off the balance sheet, obviously, you'll get some concerns there. As long as the debt is guaranteed, the ROI is there, the market can overlook it. But it's just more competition for this 10-year treasury, which, folks, has hit a new 2026 high, 4.728%. Every tenth of a basis point, I don't know what it's worth, but it's like a couple $1 billion something of interest we have to pay. Like, it's expensive. So that continues to go higher. SpaceX getting a nice little move right here, and Tesla. Is it really this Elon tweet from last night?
Tesla had a recall today in China, by the way, which is not like the best news, but the market like does not care. I think it was like 2 million cars they had to recall. I'll get the exact number on that, but maybe it's just this Elon tweet. Oh, Elon also said we're aiming to reach 30 Starship launches a day in 2030, which is 10,000 annualized. It's still tiny numbers compared to airplane flights. So, I mean, that could have been part of the reason. So he said right there, I know this sounds crazy right now, but I think both SpaceX and Tesla will exceed these estimates. SpaceX is expected to grow 2,000% revenue in the next 5 years. Tesla is expected to grow 119%. Elon says, I think we will do more. And then he talked about the Starship launches. I mean, maybe that's enough to get the market to be a bit more excited. 5,000 robotaxis approved for operations in Nevada. Well, actually, that's probably a reason then, right? Like the robotaxi stuff hasn't been in the news as much as it needs to. Yeah. There you go. Tesla has just received approval for its full autonomous vehicle network company permit in Nevada, clearing the way for Tesla to launch a paid public robotaxi service in Las Vegas. This allows Tesla to deploy up to 5,000 robotaxis over the next 12 months. Right. Next time we're in Vegas, we got to try the robotaxi. When's the last time I went to Vegas? Put in the chat, when's the last time you went to Vegas? I think the last time was... It was a while. Is that bearish Uber? Probably. I mean, Uber's holding up. Again, I don't think that takes away from any of Uber's business, but the headline itself always tends to be bearish for them. Last time I went to Vegas was CES in January of last year. No, January of this year, 2026. That was my last time in Vegas. Last October for Intuit's conference, going again this October. Yeah, I think that's the last time I went. I don't think I'll be going by the end of this year. Hood Summit wasn't September, though. Yeah, that was also in Vegas. You're right. Was it in Vegas? Yeah. Hood Summit was in Vegas. It was in Vegas, yeah. Tesla also owns Bitcoin. That's a good point. How many Bitcoin? It's like $1 billion worth of it, right? How much Bitcoin does Tesla own? 11,000 Bitcoin. Okay. That's also probably a catalyst. Remember when Elon crashed Bitcoin in May of 2021? When he was like, I think Bitcoin is consuming too much energy. This was after Tesla bought Bitcoin on their balance sheet for the first time. It was so weird. It's like they bought Bitcoin at like what, 50K or something? And then he tweets like, I think Bitcoin's bad for the environment. It's taking away too much energy. And then it just plummets like $4,000 on that tweet. And everyone was like, dude, didn't you buy it? Like, why are you doom posting about it? But they've continued to hold a decent chunk of it. Last time I was there, I proposed to my wife. Wow. Special. In Vegas. I think I've been there like 4 or 5 times over the past couple of years. So I think probably next year we'll be there again. ETH 2,400. So your software names creeping back up. Your BTC names creeping back up. Nebby is getting a little bit of a move right here, up 1.8. Bitcoin actually trying to get back to 78, which would be really nice to see. Yeah, I wonder how much energy Terafab will take. I mean, if Elon actually builds Terafab, the amount of compute, energy, land, data centers he's going to need is going to be pretty massive. But obviously, that's also why he's been, cozying up with Micron and NVIDIA, because he knows he needs that to make this work. Which is why Citadel selling their stake, like, it shouldn't really matter. There's too many positive tailwinds for this long term. Anthropic IPO, that is getting ready to happen. Let's get an update on that as well, as they're aiming for about $100 billion of fresh capital.
A year on the new technology, not millions. And, we're still in the early innings. So it just shows the profound impact that AI can have on productivity and helping companies move quicker to execute on their businesses.
I mean, do you think so for retail investors in the public market? I mean, what? Because for you, it's different, right? You're in the private market, but once these Anthropic, OpenAI, I mean, is that the best way to play just the revolution of AI right here? Is that what you would tell them?
I mean, it's certainly the most pure play way, right? I mean, the heart and soul of kind of this AI wave is the foundation models, and Anthropic is the leader there. So it's hard to imagine a better pure play way to do that. NVIDIA's, the other obvious one, and you were talking about Broadcom earlier. So the kind of chip, data infrastructure stack areas, all that are exposed to it, but no one really with this kind of like software margin profile and who owns the intelligence layer, right? Like there's a lot of building blocks that are being invested in, and those are super important because Anthropic and OpenAI wouldn't be able to survive without them. But I think the kind of the model is the heart and soul of the wave.
Does it open up the IPO window for some of your other companies that are not, $1 trillion companies?
Yeah, I mean, I don't think you have to be $1 trillion to go public, but certainly, we're not in times where companies can go public with, 200 million of ARR or something like that. My sense is that, all the attention is focused on kind of these two AI leaders. And then after that, there'll be a wave of IPOs as these kind of the AI application companies, kind of like Legora, Lovable, things like that, kind of catch up and kind of have their own revenue scale. One of the issues holding the IPO market back in general is many of these companies are at the scale that maybe they could go public, but the private capital markets are so robust right now with capital valuations and things like that. So it really is fine to stay private longer and mature your business and do all the things maybe you want to do before you face that public market scrutiny.
Dario and Sam are going to have to deal with a lot of that public market scrutiny. But again, this is why the S1s are going to be incredibly important. These revenue run rate growths are just unbelievable. It's a question of sustainability and ultimately the operating margins on a lot of these businesses. So look, they're planning to list by like the end of September, which means we got to get this S1 probably in a few weeks. And I think that's when we'll have a much better understanding of what's happening with Anthropic. SPY 765.89, that's up about 0.5%. You got Amcor, that's down 1.3. Coinbase, that's up 9. Affirm, that's up 1. Broadcom, that's up 1. Micron, which lost a lot of its momentum, but still relatively flat. Bloom at 197. Your software names, ServiceNow holding 130, Palantir 177, Salesforce 209 are waking up. Robinhood's still up a nice 11%, even though it got hit at 109. And overall, Tesla, Hood, Bitcoin, some of the software names, these are kind of the major winners of the day. SpaceX right there, that's also up 1.6%. CoreWeave has been stuck at 90, dropped to 87, got the bounce. It's kind of confusing why sentiment on the neoclouds changed this week. I mean, it's almost like, so Nebius diluted, which is like, okay, so all the neoclouds have to take a hit. If CoreWeave diluted, I wonder if all the neoclouds would also take a hit. But I think the Josh Shapiro Pennsylvania executive order, just in general, because they didn't keep any of the earnings pump. It's one thing to give up a little. I mean, Nebius did keep some of it, but CoreWeave gave all of it back. Anything, the growth that we saw, particularly around their ability to license 6-year-old GPUs, I think was the kind of big tell that the compute constraints continue to exist even with some of the broader issues like debt. Palantir 178, as that's up 2.4% on the day. All right, folks, that is it for me. I think those are most of the major headlines that we have today. Do you like Meta here? Yes, I like Meta here. I just think they're going to have some issues with the lawsuit headline-wise. I really don't think it needs to go that much lower, but if it needs another 10, 15% to get the flush out, then it is what it is, especially if they lose the lawsuit. But I think Meta is the biggest steal in the market right now. I mean, you're talking like it's sometimes people forget how important Meta is, what they're growing at, and then the perception of their company to the street versus the actual reality of what's happening. I'm not saying Zucks hasn't made mistakes and hasn't been good at communicating a lot of these different things, but
I think Meta is going to be fine long term. Nvidia, they're trying to get back up to 216, 215.74, right? They're up from 214, and then Palantir 177.60. All right, word of the day and song of the week. Let's do that. We are not going to have a market close today. Again, we'll be with family tonight. We will be back on Monday. Next week's going to be super important with Nvidia. So that will be a big one that we look at. But I will be listening to some new music this weekend as I'm still diving into all these different Queen songs that are out there. Word of the day is prolepsis. The act of anticipating something before it happens and treating that future event as though it were already present. The excitement around the company was pure prolepsis. Yeah, there's no way I'm saying that wrong. The market was valuing the business. It could become 5 years from now rather than the one that existed today. The act of anticipating something before it happens and treating that future. I mean, this is, yeah, we pretty much do this constantly when it comes to investing. Dude, there's no way I'm saying this wrong. You guys are actually making me look this up. I'm not saying it wrong. Now, granted, when I say that, those are usually the names that I'm saying wrong, but there's no way. There is no way. Let me pull this up. There's no freaking way.
Prolepsis. Lepsis. Prolepsis.
Yeah, there's no way. You guys are gaslighting me here, bro, thinking I'm saying this name wrong. I know I've said some of these easy ones wrong, but still. Prolepsis. Okay. That is what we've got on this word of the day. Song of the week. All right, so we're going to do the same thing with ChatGPT. What's the prompt? We're trying to do like 25 greatest songs of all time or something. Can you give me a song to listen to that is one of the 25 greatest songs ever? Okay, I know Purple Rain. All right, I know Purple Rain. Give me another one. Even though I'm not going to say it. I'm not going to say it, but I know Purple Rain. Wish You Were Here, Pink Floyd. Okay. Wish You Were Here, Pink Floyd. Is this legit? Is this legit? This is absolutely in top 25 ever conversation. What makes it extraordinary is how simple it is. There's no massive production trick or complicated structure, just one of the most recognizable acoustic guitar openings ever, and a song about absence, alienation, and missing someone who's technically still there. You guys agree? Top 25 all time? Wish You Were Here? Pink Floyd. You're probably going to cry listening about it. Okay. I will listen over the weekend and let you guys know on Monday what I think. Wish You Were Here by Pink Floyd. That is our song today. How do you not know these songs? I don't know, dude. I don't know what happened in my childhood, but this music. Also, my parents, like, usually you get introduced to music from your parents too, right? Like, my parents don't know any of this stuff, dude. And my sister never cared about it either. So it was kind of up to me to figure it out. And I definitely did not spend time trying to get into this music. But as I approach 30, I'll be 29 in October, dude. Dirty 30. It's creeping up on me. I feel like as a 30-year-old in America, I should probably know some of these songs. So that's what I'll be doing. All right, folks. Thank you all for being here. I'll be back on the Market Open on Monday. I've had a lot of meetings this week. I've had a lot of stuff behind the scenes. I know I've told you guys that I want to do something big for 2027 and really take the show to the next level. And it's been a productive week in terms of advancing that mission. And I think 2027, the show is going to be on a whole different level. Market open, market close. And it's something I'm really excited for. Had a lot of good progress this week. And so there's a lot of work to do over the next 4 months to make it happen. But I think 2027, we're taking this to the next level. And we're really like going for it. Like, it's been a fun 4 years building this. But like, I think 2027 is going to be where we take that next step. And then hopefully we see, that growth and momentum continue. But
Yeah, 2027 is going to be fun. You'll be on time in 2027. I'm literally going to have to be on time in 2027 because we might have a new studio. We might have a new location. We might have a lot of new shit happening to the point where if I'm not on time, I'm probably not in the studio in and of itself, which is not a good thing. So yeah, 2027 should be fun and a lot of work to do. But again, I'm deeply, deeply grateful every day for people coming on and watching market open, market close. It is, again, it's one of those things where it's like you start doing this 4 years ago. You don't even know what's going to happen. Is it going to work? Are people going to care? And then you evolve with the audience. You learn with the audience. You're on the journey with everybody. You're not trying to be the expert, but you're trying to be someone who's willing and intellectually curious enough to try to learn about bond yields, even though you've never, taken an economics class around the 10-year treasury and learn about silver when silver is exploding. Like all that stuff to me is just an exciting, fulfilling opportunity to care more about markets, obviously to help myself and others learn about opportunities that can help us make money in markets, because that's the whole point of this, to get to a different level of financial freedom, and then also cover the day-to-day news that's happening in markets. And so I'm just really, really grateful every day that I get the opportunity to do this and try not to take it for granted. And hopefully we can take it to the next level going into next year. So should be some exciting times. Thank you everybody for being here. Hopefully everyone has a great, great weekend. I will see you guys on Monday for the market open. Next week is going to be a massive, massive week as we have NVIDIA, we have Kevin Warsh. Maybe in the new studio, we have a segment to do some day trades live. I mean, I'm thinking of a lot of different ways to spice up the show. A lot of different guests, segments, different opportunities. By the way, I know a lot of you guys have been asking about it. 2027, there will be an official public portfolio. 2027, there will be an official public portfolio. There will be real money. There will be real trades we do in that portfolio. You guys will have full and complete transparent access to that portfolio. Obviously, it's hard to do with like my actual net worth, putting it out there. You kind of want to leave that for yourself, protect your safety when it comes to that. But in terms of actually having a managed public portfolio, there's a lot of stuff I'm working on for 2027. And I think it's going to increase the visibility, increase the reach, the distribution, provide a lot more value for the people that are watching. There's going to be a lot more research coming in 2027. Like there's just a lot of different ideas I have. And this week was really productive to get those things to the next level. We got a lot more months of work to do, but yeah, 2027 should be fun. And it should be a lot stronger. So thank you, everybody. Appreciate you all. I will be back on the market open on Monday. Cactus knows about some of these updates. Cactus knows about some of these updates because he's obviously a big part of the show and what we do here. So it should be an exciting time. Thank you, everybody. Appreciate you all. I will see you guys on the market open on Monday. All right, everybody. Have a good one. Enjoy the weekend. See you guys on Monday.